After the ship is freed, we get the latest. Good morning, everybody. Just 30 seconds or so until the start of the European equity trading session. Let's have a look at where the futures are positioning us. And we do have expectations for a bit of a rise at the start of the European trading session. Interesting to pick up where Mark left off in the last hour of the program, thinking about what that rising yield environment does and does not mean for risk assets. Previously, when we saw yields going up by quite this speed, you might have thought that that would be bad for risk assets, and we have seen that earlier on this year. Now, it doesn't seem to be the case. At least our expectation is that we'll make some modest gains. That said, US futures, NASDAQ futures in particular, are pointing to the downside. So maybe that does not hold for tech stocks. Maybe tech stocks will still come under a little bit of pressure. NASDAQ futures down by 0.3%. So onto the GMM and what we're seeing for European equity markets right now. The Spanish IBEX up by 0.6%, the FTSE 100 up by around 0.5%. So we are making some modest gains to the upside. A little bit of weakness in the euro, a little bit of strength in the dollar, and that's really where we want part of our conversation to go next, because we are seeing this rising yield environment, certainly on US treasuries, although it applies elsewhere, but certainly on treasuries, and that is having an impact on the dollar, having an impact on the yen and the euro. It's moving into the FX space. Let's talk about that now. President Biden will unveil his massive infrastructure stimulus package. That's coming on Wednesday of this week. It is said to focus heavily on initiatives to rebuild bridges, roads and waterways over the next decade. The administration is looking to spend $3 trillion altogether on infrastructure investments, but sources expect tomorrow's number to be for a smaller amount. Meanwhile, President Biden has marked April the 19th as the date when 90% of all US adults will be eligible to get a COVID vaccine. He says his administration will more than double the number of pharmacies where shots can be administered as it ramps up the pace of inoculations. But he warned against complacency.
This is deadly serious. We share the sentiment of Dr. Walensky, the head of the Center for Disease Control and Prevention. The CDC expressed earlier today, this is not a time to lessen our efforts.
Some of the messaging there from the US administration, from the president himself. Joining us now, Simon Harvey, Monex Europe Senior FX Market Analyst. And Simon, I know in the break we were just chatting, and I was thinking we'd start with the Europe conversation, but given the moves in the dollar, seems appropriate to cast our minds stateside and to think about the Treasury market move, which seems to be one of the big moves of the morning. Simon, your thoughts on Treasuries on the rise here and the link with the dollar, because we do see Treasuries up. We were testing 1.76% on the US 10-year, and the dollar on the rise. Your thoughts on that link?
Yeah, I think the links proved very influential for FX markets over the beginning part of the year, especially when pricing the initial COVID relief plan. But as we progress further into 2021, the more the emphasis is going to actually come back to the front end of the US yield curve, specifically the 2-year, and what that means for market expectations for the Federal Reserve. And our understanding is that based upon the last Fed meeting, they're going to do a very good job at almost anchoring that front end of the yield curve. So what we're going to start seeing is a bit more of a disconnect between how the 10-year is trading and the broader US dollar, unless it comes back into the haven properties of the dollar and how fixed income markets are behaving. But on this reflationary side, the emphasis is going to start to incrementally go back to the 2-year. And with the Fed doing quite a good job at the moment of anchoring that 2-year real rate, we expect mild US dollar depreciation across the board. Now, it's early on in the year for this to actually be occurring, and we've still got quite a long way to go, especially with the reopening and the vaccine efforts and still US economic outperformance. But we think that the dollar's holding quite a high valuation at the moment, and it leaves quite a lot of scope for negative surprises.
And Simon, what dictates then whether the markets, whether the FX markets are focused on that 2-year horizon, as you say, and you suggest that could be bearish for the dollar, or focused on a little further up the curve and the spreads that are available, maybe at 10-year horizons, and comparing the US with other parts of the world? And if we continue to see yields in the US ramping up faster and that spread between treasuries and other sovereigns widening, why will that not mean a stronger dollar?
Well, FX markets really care about what's here and now, and the whole reason why the emphasis was on the 10-year, it was the most liquid part of the curve, and central banks after the pandemic practically killed spreads on the front end of the curve. They said rates are going to stay low, loose monetary policy for as long as it takes, for the next 2, 3, 4 years in some cases. So the spreads available on the front end of the curve were pretty much non-existent. So the emphasis very much went on the longer dated securities, and what the overall vista was for the economic outlook over the next 10 years tends to be how long a cycle takes in economic terms. So what does the whole picture look like for the recovery? And so FX markets were very much focusing on that. But what we're going to start seeing now, especially with the Federal Reserve shift towards an average inflation target, and as that 2-year starts to incorporate more of the 2023 horizon that markets are betting on the Federal Reserve to start hiking, is that you're going to start to see all of a sudden central bank policy divergence come into play, and who's going to be the first one to react. And arguably, the Federal Reserve almost splits the field within the G10 space. So once this starts to occur, we are going to start to see, some currencies where the vaccinations are aggressive, the fiscal stimulus is on par in percentage terms with the US. They're going to start to chip away at the broader US dollar over time. So it really depends on where central banks are kind of pointing, where we're expecting liftoff, but not even liftoff, the initial signs of normalization. And once that 2-year starts to incorporate more of 2023, which is under a lot of scrutiny for the Federal Reserve's actions, we're going to start to see that 2-year become more of a dominant factor within FX markets.
Okay, so that's interesting. So that's what dictates the focus on the 2-year. Let me ask you about the yen then, Simon. We started the last hour of the program with a headline across the Bloomberg showing the yen declining to 110 against the dollar. That's the weakest in about a year. Where do you expect the yen to go from here, given what you've said about your being mildly bearish on the dollar, but are you even more bearish on the yen?
Yeah, I think it's a very difficult case when it comes to the Japanese yen. Again, it's one of these economies which is just locked into very, very loose monetary policy. I think that the vaccinations are still quite slow in Japan, and you've got this kind of structurally low inflation and low growth economy in play. So the vista doesn't look very good for the Japanese economy. But at the same time, if the broad US dollar is starting to weaken, notably, it will start to eke into the Japanese yen. So over the next 6 months, we're not really expecting too much of a movement from the Japanese yen, and risks are tilted definitely towards more yen depreciation. But as we start to come into the second half of the year, going into 2022, where potentially US economic data undershoots market expectations, or even if it doesn't, the rest of the world starts to catch up with regards to vaccinations, with regards to growth and reopening, then we're going to start to see that US dollar mildly depreciate over time. And I think Japan's going to be the area where the depreciation is the mildest for these exact reasons. And where we're seeing these deeper pockets of dollar depreciation across the G10 is highly dependent on where you're going to see the largest divergences with central bank policy. And with the Bank of Japan at the moment, it looks like their latest decision in March was to provide longevity with loose monetary policy. So it doesn't look like they're going to front run the Federal Reserve, and therefore the Japanese yen is going to practically sit at the back of the race.
Simon, thanks very much. Stay with us. Simon Harvey, Monex Europe Senior FX Market Analyst. He stays with us on the programme. Coming up later on the programme, more on the dollar and yields, as we've seen some sizable moves in treasuries this hour. We went up to test 1.76% on the US 10-year. We're back down with a 1.74 handle right now. But as we were just discussing with Simon, that has been lifting the dollar, and we have seen some weakness in the yen. So plenty to talk about. And we'll move our conversation on to what that means for the euro and other crosses as well. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Welcome back to the European Market Open, 11 minutes into our European trading day for this Tuesday morning. And European equity markets making moves to the upside. You can see the Stoxx 600 up by around 0.5%, and it is fairly reflective of what we're seeing across Europe. Let's get into some of the stock details, though, with this morning's Stocks on the Move. Here's Danny Berger. Danny.
And we talked about it a little bit earlier, but Scout 24, one of the big movers to the upside, up nearly 3%, a $1.1 billion buyback. That's about 16 million shares. And with that price, it's buying it back at about 69.6 euros. So we're seeing share prices climb higher towards that. Also on the move this morning, Ryanair getting an upgrade from Berenberg analysts saying that, look, 2022 looks good. The unit economics look good for Ryanair, and really a lot of low-cost air providers, but they like Ryanair the best, so they're upgrading to a buy. Finally, CD Projekt, the video game maker, it's been on a pretty big rally over the past 2 days. They're set to announce an upgrade, a new release for one of their big video games, so it seems like investors getting in ahead of that release. Finally, let's look at the macro picture. Anna, we've been talking about the U.S. 10-year yield all morning. It's climbing higher. It's clear that there's a bit of a cyclical rotation going on. The general U.S. futures are higher. However, the NASDAQ futures are lower by 0.2%. It could be just more debt issuance expected from the U.S. with Biden going ahead with his package. Either way, that's resulting in some weakness in the yen and at the same time, more strength in in the dollar, Anna.
Yeah, it is interesting, though, that we didn't see risk assets as a whole fall out of bed as a result of this 1.76% that we got to on the US 10-year yields, but we're back down at 1.74 now. Danny, thank you very much. Danny Berger with the latest on the markets. Now, the ECB must be cautious when it shifts away from its emergency stimulus, even if the economy rebounds as predicted. That is according to the outgoing head of Lithuania's central bank. The governor added that the ECB can't make very sharp changes to monetary policy. The central bank has been forced to backtrack in the past after tightening too soon. We remember those days. Simon Harvey, Monex Europe senior FX market analyst, is still with us. Simon, just thinking there about exit from policy by the ECB, but I wonder what you make of the weakness in the euro, slipping to a 4-month low during yesterday's session. Once again, we see weakness, a 117 handle on the euro right now, Simon. Given your bearish, mildly bearish on the dollar, though, how much expectation do you have for further weakening of the euro?
Oh, we 100% have expectations of further weakening of the euro, especially in the short term, and if in FX markets, especially when looking at what current price action means for future price action. The rule of thumb is always the trend is your friend. The headwinds to the eurozone economic recovery have been substantial, and they don't show any signs of really easing over the next 2 to 3 weeks. But what we are showing is that a month in financial markets, especially FX markets, is a very long time, and a quarters are just a different beast in itself. So a lot can change, and this has been one of the takeaway lessons for FX market forecasting over the last year or so, is that you can't, the situation is so fluid that you can't necessarily write everything off. So even though we are mildly bearish on the dollar, we still see short-term pressure put on euro-dollar to the downside. We don't necessarily expect the recovery in euro-dollar to be aggressive within the next quarter to five months. But what we are expecting is towards the second half of the year, once economic conditions kind of stabilize, vaccinations catch up, that's when we're going to start really seeing the broader repricing of the US dollar across the board. And that's where euro dollar has some legs to climb back above 120.
So we could see the euro back above 120. By the time we get there, Simon, what will be the things that will be dictating euro-dollar? Because you suggest that things will have normalized a little bit in the second half of the year. We maybe will have seen the vaccine rollout, certainly in the US, and it will have gathered momentum, and it will hopefully have been more effective and more complete in Europe as well. What will we be talking about then when it comes to deciding if we're buying the dollar or the euro?
I think it depends on both sides of the trade. It depends on how the US economic recovery pans out. Again, markets have very, very, very high expectations of what this is, and how quickly the labour market's going to recover, and how quickly the Federal Reserve are going to have to pivot and take a U-turn. And by the opposite, markets are actually taking quite a pessimistic view on the Eurozone recovery. So you've got this nice balance there of potential under-delivery on the US side, and over-delivery from European sides. And I think, it's not just a vaccine story, but it's also how consumption is going to rebound in both economies. And this is something that, consumption and investment and so forth, and it's something that central banks are really having to battle with. And you're seeing these big divergence in economic schools of thoughts within the policy committees of these central banks of what consumption patterns are going to look like. You saw Jerome Powell say you can only have dinner once. It's the same way as saying you can only have one haircut. But at the same time in the UK, the Bank of England are showing split divergence of, this pent-up demand story versus seeing elevated household deposits as new wealth. And I think that's the big unknown going forward, is how these respective consumers are going to kind of react to the reopening. And I think that given the stimulus checks, markets have actually put a very, very high level of how quickly the US economy is going to react. And similarly, I think everyone's quite bearish on the euro, so it gives some room there of a bit of a correction.
Yeah. I'm with you on the dinners, Simon. You can only eat dinner once, but I'm not sure I'm with you on their haircuts. I know plenty of people who could have their hair done more frequently than previously. Let me ask you about the UK then, because I saw that the pound was falling to a day low around the 137.55 level right now. And I wonder, you referenced there the amount of consumer spending we're going to do, and Andy Haldane has been widely quoted as saying we're going to see a rip-roaring recovery, or there could be a rip-roaring recovery as those with savings dip into them to spend. What is your expectation for the pound?
I think the pound at the moment was one of these, these glorious currencies throughout Q1 because you had that fiscal stimulus announced, you had the reopening, you had aggressive vaccinations, but all of a sudden the headlines stagnated and you saw these risks emerge, not necessarily from the UK standpoint, but just more with neighbouring countries, and that's weighing on the pound. People are just consolidating their long positions. We don't necessarily see the economic outlook change too much from our previous forecast. And we can definitely see cable going back above 140. I think for the next month to 3 months, the question is, okay, the government's meeting its provisional timeline for the economic reopening, but the big one so far will be the April 12th deadline, and that's when the service sector starts to get back on its feet, and we will then start to look back towards these very timely economic data points like the CHAPS data for debit and credit card spending, of how are consumers reacting to this service sector reopening, even if it's just marginal reopening with regards to outdoor dining or hairdressers opening but with limited capacity. I think that'll be very telling. And there's one thing that, people who are looking at sterling and UK assets of the post-Brexit period is that the UK consumer just has this brilliant ability to just dig into its pockets, and it's constantly surprised us over the last 4 years that people said they wouldn't do it, but they have.
Okay. Yes, and I'm sure you could eat dinner out more frequently than before the pandemic, couldn't you, in a kind of celebration. Simon, thanks very much. Simon Harvey, Monex Europe Senior FX Market Analyst. Thanks very much for joining us. Simon will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Welcome back to the European market. Open 22 minutes into our European trading day, making some decent gains across European equity markets this hour. Now, Nissan's former top lawyer says he endured retaliation, demotions, and even surveillance of his family after questioning the integrity of the investigation into Carlos Ghosn's alleged financial misconduct. Speaking publicly for the first time, former Global General Counsel Ravinder Passi told us that after writing a memo to the Nissan board outlining conflicts of interest, he was frozen out. Bloomberg's Reed Stevenson and Brian Bremner spoke to Passi.
Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Ghosn executive conduct matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK.
So Passi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation.
I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. The first time I noticed this was around mid-March. And I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who had spent 16 years at the company.
It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This is a car company. This is not the KGB.
That was the former top Nissan lawyer, Ravinder Passi, speaking with Bloomberg Quick Take. You can catch that full interview online. In a statement, Nissan says it's contesting a claim by Mr. Passi, which contains numerous mischaracterized allegations. A spokeswoman says the car maker, though, is unable to comment further on the matter, which is subject to ongoing litigation. 8:26 here in London. Coming up on the programme, all plans are being discussed. Bill Huang's Archegos breaks its silence. We've heard from the business about how they're reviewing the future. Up next, we discuss the latest on the block trade saga. We'll get some market analysis. This is Bloomberg.
know that Norway sells way more electric cars per capita than the US? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open, half an hour into Tuesday's equity trading session. Remember, we have a shortened trading week, of course, because of the Easter holidays. We've got stocks here in Europe up by 0.6%. The FTSE 100 making some decent gains, as is the CAC 40 over in Paris. If we look at the sector breakdown, you can see that the banking sector is doing pretty well. So after the sell-off of yesterday, today we have a different story dominating. The sell-off of yesterday was all to do with these block trades going through and the fallout from Archegos and Bill Huang and his family office. So as a result of that, we saw weakness in bank stocks yesterday. Today is different. We see a rebound in bank stocks. Part of the driver is sort of a recovery from the day before, but also we see stronger treasury yields back up against 1.76% over that just now. So going up above the 1.76% mark on the US 10-year, meaning that we are seeing some strength to the banking stocks. We could also interpret that move up in yields as a reflection of a strong sentiment around recovery in the global economy. And so basic resources also moving higher, up by 1.5% for basic resources, utilities and the like to the downside. And there you see that move in the 10-year Treasury. 1.76 is once again the handle there. Let us get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. President Joe Biden says that from April 19th, 90% of US adults will be eligible to get a COVID-19 vaccine. His administration is also more than doubling the number of pharmacies where shots are available, but the president is warning against complacency as case numbers are rising again. Prime Minister Boris Johnson says the UK is on track to entirely lift pandemic restrictions over the next 3 months. He's hopeful the country can avoid another lockdown with infection rates at their lowest in 6 months. The Prime Minister says the main risk is a new vaccine-resistant strain emerging or coming into the UK. After almost a week, ships are moving again in the Suez Canal. The Ever Given has been freed, clearing the way for traffic to resume. Authorities expect operations to return to normal within days. The Suez Canal is a conduit for about 12% of global trade and around 1 million barrels of oil a day. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much. Laura Wright here in London. Now back to our top story this morning on the forced sale of more than $20 billion of stocks linked to Bill Huang's Archegos Capital Management. The US Securities and Exchange Commission is said to have summoned Wall Street banks yesterday. The SEC is digging into what triggered one of the biggest fund blow-ups in in years. The calls also involved the Financial Industry Regulatory Authority, which quiz brokerages about the impact on their operations and credit risk. Joining us now is Michael Hewson, CMC Markets Chief Market Analyst. You've been writing about this for the last couple of days then, Michael, a real focus for investors. So when you think about where regulation might come from and the regulatory push that might follow, do you think that's sensible? Do you think this is that push going to focus on leverage levels, on the use of swaps, on how we look at what family offices are doing, despite the fact they don't hold outside money? I mean, where should the regulatory focus be?
Well, I think, Anna, this, the focus on regulation is probably the wrong area. I think what I take from this particular episode is the fact that this particular fund manager didn't follow proper risk protocols, or the banks who were lending him the money weren't following proper risk protocols. If you coalesce all of your risk in one particular area of the market, you may get good returns over the very, very short term, but over the longer term, you run the risk of that position blowing up on you. And I think what happened last week was the fact that Viacom CBS talked about issuing $3 billion worth of new money. And when you look at the trajectory of that stock price since October lows, it was up over 400%. It was always going to be susceptible to a significant pullback. And that really, I think, was the catalyst. If you look at the positions that were liquidated, it was in a very, very small area, a very, very small pocket of the market. And ultimately, the risk management processes that were adopted by these banks with respect to this particular customer fell short. And ultimately, now the banks are going to have to pay the price for that. So for me, I don't think this was really a failure of regulation. It was a failure of process.
So you think the regulations were there, Michael, and the protocols and the risk management structures were there, but what, they were ignored? Because certainly it does seem as if some banks in Europe, in Japan and elsewhere, perhaps, have allowed themselves to get quite a lot of exposure to one client.
Absolutely, and I think I'm not going to prejudge, I think, what the regulator may find with respect to this particular episode. But to my sort of trained eye, and I've been in the markets nearly 30 years now, risk management is at the cornerstone of everything that I do. So you spread your risk. And ultimately what we've seen here was that this risk wasn't sufficiently spread. So when the blow up came, this particular fund was particularly heavily exposed. And I think what we've seen here is a reminder, in the wake of what happened with respect to the GameStop thing, is that professionals can get it wrong on a fairly regular basis. And if we can take any lessons from this, is to really practice a very sensible risk management strategy and diversify your risk. This is something that I always impress upon everyone I speak to when I talk to clients about markets.
Are there lessons around leverage then, Michael? I mean, some people look back at LTCM and say it's not a perfect comparison, but there are lessons about having too much debt, or are there lessons about too much leverage? I mean, what are the lessons that you mentioned? One of the lessons to take away from this, but should one individual investor be able to have as much leverage as this, that they can have such an impact on the bottom line of such enormous financial institutions?
Well, again, that's a decision that needs to be made on an individual basis or an institutional basis, and that's down to the risk processes in place at that particular institution. I would argue, no, that certainly shouldn't be the case. I think, if leverage is overused, it can become a very dangerous thing. I think the one thing about this is that banks now are much better capitalized than they were 12 years ago. And if you use the pandemic as a benchmark, US banks in the first half of last year set aside over $115 billion in terms of loan loss provision. So I think, what this episode tells us is that leverage will continue to be a problem if it's abused. But for me, leverage is a very good mechanism to actually maximize profit potential in this low rate interest rate environment. And that, for me, I think is at the cornerstone of this. I think if you have central banks driving rates to record low levels, the drive to generate a return will only increase the level of risk. And it's essentially a quid pro quo, if you like. If you keep interest rates low, then ultimately you will drive capital into areas of the market that are inherently more risky.
Leverage, a good way to maximize returns until it isn't anymore. Michael, thanks very much. Michael Houston, CMC Markets, Chief Market Analyst. Thanks for joining us. 38 minutes into our European equity trading session, and European equity markets for another day really managing to put aside the sort of more niche, more bank-related concerns, very real as they are around those block trades, and make gains to the upside, up around 0.8% on the FTSE 100. Coming up on the program, Joe Biden says 90% of American adults will be eligible for a COVID shot by April the 19th. It's a different story in Germany, where some vaccination centres could be closed over the Easter holiday. We get the latest from Berlin next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy, and we need companies to step up.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to the European Market Open. 41 minutes into our European trading day this Tuesday, and making decent gains to the upside. US futures a little more mixed, but it's tech stocks that look as if they could be the weak link, down 0.5% on Nasdaq futures. The leader of Chancellor Angela Merkel's party, Armin Laschet, said Germany must urgently improve its pandemic management. That's as Europe's largest economy grapples with a third wave of infections. Criticized by Merkel as one of the state premiers not imposing enough restrictions, Laschet added that federal and regional authorities need to cooperate better to control the virus. For more on the state of play in Germany, Bloomberg's surveillance early edition anchor Matt Miller joins us now. Matt, good morning. So we're seeing this constant push and pull between the centre and the states, it seems, between the federal and the state level governments, administrations. What is that tension between the federal government and the states doing to the fight against COVID-19?
Well, it seems to be slowing it down, frankly.
And, you know, there was a push by Helga Brown, apparently, to hold a conference call with state leaders yesterday and to organize a call with Merkel and all of the leaders today, reportedly. Now, Merkel said she doesn't want to have another call in the next few days, and a number of the state leaders have pushed back against another video conference call as well. They're all frustrated that they have these calls, as Merkel says, every 3 or 4 weeks, and then just sort of push the goal line further away, but inevitably have to do it again the next month. They just aren't making enough headway with vaccines is the crux of the problem, and so they have to continue these lockdown lights. They're not able to instate a harder lockdown because the people are just so fatigued by this dragging on for so long.
Yes, and now what we see in terms of the variants and their spread around Europe, what was known as the UK variant, the 117, now has gone from the periphery to being the main force behind this third wave that we're seeing in Germany and in other parts of Europe as well. And we know increasingly across Europe just how fast that can spread. So we heard this U-turn from Angela Merkel not long ago. There was going to be a nationwide lockdown and then there wasn't, but it still leaves the question of what is the next step then? What is the next stage of handling this coronavirus outbreak in Germany?
Well, as you mentioned just before the break, a real problem is that they may not be able to continue vaccinating over the Easter holiday. And, you know, Germans take their holidays incredibly seriously. All stores close on Sunday. What seems like sort of an anachronism is a law that is very strongly enforced here. And it makes it difficult to do things like the vaccine rollout. The bureaucracy is also a real problem. The inefficiency of German bureaucracy is truly under the spotlight here when it comes to handing out vaccines. They have got 12.9 million shots in arms, apparently, but they haven't vaccinated with both doses a substantial portion of the population, and they're just having trouble getting it kick-started. So it's unclear as to what the real problem is. It doesn't seem to be a procurement issue, but rather giving out shots. That's the problem. You know, I went to my GP last week and said, what are they, vaccinating over 80s now? And he said, no, we're vaccinating everybody over the age of 78. So, and he told me that my likelihood of getting a shot would probably come in May or later. The interesting thing is to see whether we have a substantial part of the poor population vaccinated by the September elections, in which, you know, the CDU and the latest polls lost more than 2 points, and the Greens are continuing to gain on them. So it's very interesting to watch the power of the Greens really overtaking and showing strength over the SPD and getting ever closer to the CDU.
Yeah, I got my vaccine on Friday, Matt, so I hope that that you have the privilege soon. Matt Miller, Bloomberg Surveillance Early Edition anchor. Thanks very much for joining us and bringing us up to date on the rollout of vaccines across Germany. Relations between China and Western countries are worsening over reports of alleged human rights abuses in Xinjiang. The fallout is spreading to companies that have taken a stand. Earlier, we asked the president of the EU Chamber of Commerce in China, Jörg Wuttke, how the tensions are affecting the business environment.
Yeah, I mean, we are between a rock and a hard place. We have actually put this up as a topic towards the Chinese government already in September last year in our position paper, where we actually drew the attention of the government that our companies are in an impossible situation. On the one hand, of course, they have to follow the corporate guidelines, the compliance issue, the global compact guidelines that they signed up with. At the same time, of course, they're here in a highly politicized environment. So how to avoid this? It is hard to avoid this. You possibly have to really tune your communication skills to be as less obvious about situations. I mean, to the point where actually you really have to just let it happen, lay low and see when it's blowing over and then come back again. I mean, most of the companies I know actually had excellent business afterwards again. The Chinese customers love European products and brands. So I guess for the textile, it will be the same, in particular in view of the Olympics in February next year.
David here, do you think that does it change the longer term outlook in terms of, because there's nothing you can do about investment that's already in FDI, that's sunk cost. What about future FDI? Do you think that affects that?
Well, the interesting thing is that most of these companies that have been hit so far, be it Marriott, be it these textile companies, actually have very little investment here. It hits companies that actually source a lot of materials from China, so actually it jeopardizes Chinese jobs. The FDI into concrete and steel is actually ongoing, given the fact that China stands for 30% of global growth over the next 10 years, so you better be here. So I guess that is soul searching. China is definitely doesn't come out of this looking very pretty, and it sort of aggravates the image that China has globally. And you can see it in the Pew Research. You know, China went from 60-70% positive 10 years ago to between 70 and 80% viewed unfavorably as of today.
One of your findings here, I was hoping if you could expound on that a little bit, the broader theme here, that the business environment is China, according to some of the respondents, more difficult than ever. Can you tell us a little bit more and why?
Yeah, it's a complicated picture. On the one hand, of course, China saved the skin of many companies last year. We had many companies with double-digit growth, whereas the rest of the world was flat in the water. At the same time, you have, of course, this kind of political pressure that is on you. And again, a topic like Xinjiang is a no-win situation, however you look at this. How you deal with this, again, you want to be in this market, you want to source in this market, you want to invest here. The only thing we can do is try to reach out, as I do, to Chinese government officials in order to tell them that actually this has eventually really ramifications that could lead to a backlash in Western markets, all the way to a boycott of products being made in Xinjiang or associated with Xinjiang. So it is not a pretty sight, and the nationalism here is definitely, I guess, to be blamed for it. And in some extent, I would say is even pushing the Chinese government in the corner.
Really interesting conversation. Jörg Wuttke, the president of the EU Chamber of Commerce in China, speaking to our colleagues at Bloomberg TV in Asia. Coming up on the program, green screen, European stocks rise, nearing a record high as investors focus on the prospects for faster vaccine rollout, certainly in the United States. That's dominating thinking, it seems, and the clearing of the Suez. More on markets next. This is Bloomberg.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 52 minutes into a trading session that's broadly positive, really quite positive when you consider what we're seeing in Treasury markets. Let's get with that thought to Laura Cooper, Bloomberg Markets Live macro strategist. Laura, interesting to see. I mean, we went above 1.77% there on US 10 years. It was brief, but I saw it happen, and yet stocks are strong, risk assets not selling off, with the exception perhaps of NASDAQ futures. How do you equate this high level of US yields with enthusiasm for stocks?
Well, I think the reason why we are seeing stocks enthusiasm is because yields are rising for the right reasons. So we did have President Biden come out saying that the U.S. is going to have 90% inoculation target by mid-April. That is certainly helping propel that reflation trade resumption again this morning. We also have the anticipated build better, build bigger plan coming out from the U.S. tomorrow. That's also adding to those exceptional growth expectations. And then just overall, we just have these vaccine rollouts that are progressing. So I do think that this is a nice turnaround from what we've seen certainly yesterday when markets were kind of caught off guard by this margin mayhem that it's now seeming to ease this morning.
Let me just take us back to one of the top stories we've been covering, Laura, over the last couple of days. I know you'll have some thoughts to give us on this. Mitsubishi UFJ Securities sees $300 million of losses tied to a US client. And given the developments of recent days, we don't know who that is, but there's been plenty of talk of financial institutions declaring their exposure to a certain Archegos hedge fund in the United States. I mean, as I say, we haven't got confirmation from Mitsubishi UFJ, but many others in the sector have been talking about links with Archegos. Are we safe to say that this is something that's going to dominate the thoughts in the banking sector? It's certainly a really fascinating story. It has implications for regulators, perhaps, into the future. But it's not becoming, or it hasn't yet become, a sort of macro story.
And that is the case, that it's not likely going to be a macro story. And that's just because ultimately this is not looking like a systemic risk event. Contagion is largely contained. And I think that's why we are seeing European banks be one of the leaders in terms of Stock 600 gainers this morning, because we did see that knee-jerk reaction yesterday. Yes, this is going to be potentially longer-term regulatory implications, but I think for now, really it's all about that reflation trade. And European banks are set to benefit from that as yield curves do extend their steepening.
Yeah, and it's interesting to think about, we're quite close to the end of the month, aren't we, Laura? It's approaching quickly, quite close to the end of the quarter. And many had anticipated we might see quarter-end flows dominating things, that might take the edge off stocks. Maybe we'll see that in the US later on, but we don't see much of it in Europe just yet.
Not yet, but I think it's actually quite interesting, the fact that this quarter-end rebalancing has been hyped up to the extent that it has been. Yes, we have seen an exceptional quarter for bonds underperforming. We have seen stocks gain. But what we do tend to find is that a lot of funds actually rebalance on a monthly basis. And if we look at stocks' performance over the month of March, it has actually been relatively subdued. The Russell 2000 certainly hasn't outperformed. The NASDAQ has been on the back foot. So I would have stronger conviction in terms of a bond rebalancing, sending yields lower. But ultimately, I think the equity story is a little bit more mixed. We're going to see flows within that asset, but potentially not a sharp downturn that maybe some are expecting.
Laura, thank you very much. Thanks for joining us. Laura Cooper, Bloomberg Markets Live macro strategist. That is it for this hour. We leave you with equity markets making gains to the upside, up by 0.5% on European stocks. Despite the fact, as we've been discussing with Laura, we have US 10-year yields on the rise, perhaps rising for the right reasons, as the Fed has said in the past. 1.76% is the yield on the US 10-year. Surveillance Early Edition will be taking you through all of the market moves in risk assets, in stocks, and indeed in this Treasury market, also pushing the dollar higher this morning. This is Bloomberg.
There's risk out there. You've got to know the firms you're dealing with. You have to understand the leverage that they're utilizing.
It normally takes some time for the bodies to float to the surface, for these things to percolate through the system.
As far as we can tell, those seem to have abated for now, but way too early to give a full all clear.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the Early Edition on Tuesday, 30th of March. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Archegos breaks its silence over the block trading saga. It says all plans are being discussed as regulators summon the banks over the blow-up. Wells Fargo and Morgan Stanley are the latest to add to the sell-off. They execute more than $2.5 billion of trades on Viacom, Baidu, and others. And JP Morgan says the industry could face losses of up to $5 billion from the unwinding of Archegos positions. Well, that's definitely our top story. Bill Hwang, Archegos breaks its silence on the block trade saga. Now, stocks at the center of the $24 billion sell-off came under pressure amid concerns of more damage. JP Morgan estimates that the industry could lose as much as $5 billion from the unwinding of positions. Well, joining us now with the very latest is Bloomberg's Danny Berger. Danny, good morning to you. Do we actually know what set off this unwinding of these positions in the first place?
Well, Francine, it definitely had to be a wrong way bet in Bill Hwang's portfolio. For example, it could have been Viacom, which is one of the big block trades we've seen over the past week, losing about 50% of its volume. Because he had such leveraged positions, some estimates are as much as 5 to 8 times. That wrong way bet could have issued and triggered this margin call. But now what we're seeing is banks really scrambling to get some of these trades done, to offload them. Goldman Sachs, of course, the first out the door. We learned that Wells Fargo yesterday had some of the block trades as well. Also, just hitting the wire a couple minutes ago, Mitsubishi UFJ Securities saying that they face about $300 million worth of losses from, again, an unnamed U.S. hedge fund client. But look, we're not really seeing banks pre-market. This is the read we're just getting in, move too much on this as of yet. Goldman, of course, saying that their damage and exposure is immaterial at this point.
Danny, what has Archegos actually said about the whole saga so far?
Yeah, so finally breaking their silence, but really not a lot to be said at this point. They said all plans are being discussed as Mr. Hwang and the team determine the best path forward. Some questions now might arise in terms of scrutiny, not just over Archegos themselves, but over the industry. Now, swaps themselves aren't controversial. They're used all the time. But of course, the degree of leverage here and in very specific and concentrated positions might be brought into question, as well as the question of whether family offices need to disclose more with the SEC when they're as big as Archegos was, bigger than many hedge funds in this circumstance, Francine.
Danny, thank you so much. Danny Berger there with some great reporting, of course, on the saga. Now, Bloomberg Opinion's Elisa Martinuzzi has written a piece this week about the implosion of Archegos Capital Management. In it, she argues that the hedge fund's greed had got the better of Wall Street. Now, you can read it in full by typing Open Go on the Bloomberg terminal. Elisa, thank you so much for joining us. It's a great piece, and it basically goes to the heart of the matter, which this is a financial calamity that could have been avoided. What do we know happened? What were the triggers that could have made this, something to be avoided?
Good morning, Francine. Well, I think there are a couple of characteristics of based on what we know, and I hasten to add that we don't have all the information yet, but it looks like these were very leveraged wagers. So a lot of debt coming from a handful of financial firms, from a handful of Wall Street firms, and what was peculiar about them was that they were very, very concentrated. It appears that Hwang's fund was investing in a handful of media companies with large tickets backed by debt. And these positions were not visible because, from what we understand, they were put together by using equity swaps, which would have meant that he wouldn't have had to disclose these positions to the wider world. And what that means is that basically the Wall Street banks that were lending to the firm would have had a partial vision of his overall portfolio. They may not have known just how concentrated this fund was. And the risk, of course, as we're seeing right now, is that once you try to unwind these positions, because they're very large, they have a disproportionate effect on the individual stocks. That pushes those stocks lower. That means the collateral is worth even less, and hence the banks are left on the hook. So I think you have a couple of characteristics here which really made this a situation that was quite toxic.
Elisa, when you look at some of the market movements, are there more Archegos out there? And is there anything that regulators could do today to avoid a mess?
Well, I think this is the question everybody's going to be asking themselves. I mean, this was a fund that was, very secretive. Very few people knew of its existence, even let alone its size. And what people are scrambling for now is potential other wangs out there. If the best of Wall Street breed was lending to the tune of tens of billions to this particular outfit, who else is out there? We've had obviously very loose monetary policy over the last year. There's certainly plenty of money sloshing around. And I guess we'll wait and see. And obviously, once one of these situations implodes, as we're seeing here, it's quite possible that it has knock-on effects on anyone else who's pursuing, who's exposed to the same companies. So, the next few days will be, quite telling. But, I think the markets are settling down now, and perhaps, the worst of this implosion is over.
When do we know if the worst is over, Elisa? Are we going to have like drip feed, news drip feed, as a lot of the brokerages companies, I think, were also interrogated or at least questioned by FINRA about what exactly their exposure is. Is there anything, left that we really need to try and understand whether there's exposure to see how much this will cost at the end of the day, the industry?
Well, I think, the first signal is from the banks that are exposed. Of course, they could be the transmission mechanism to the wider financial industry. We've had two banks, Nomura and Credit Suisse, speaking, warning of material, significant losses potentially. Other banks exposed have not commented to that effect. One would believe that means, this is what, this is how far it's going to be unfolding. But of course, whether the banks can withstand the hit is the big question. I think, since the financial crisis, banks have obviously built up larger cushions of capital and buffers in general, and so far the system seems to have worked.
Elisa, thank you so much. Our Bloomberg opinion columnist, Elisa Martinuzzi, with some great pieces out there. So check out Elisa on our website and on the terminal. Smart Conversations on Bloomberg Surveillance, the early edition. Later on in the program, we'll also speak to the Salesforce Chief Revenue Officer and former BT Chief Executive, Gavin Patterson. Before then, we speak to the Chief Executive of Poste Italiane. He's Matteo Del Fante, about his company's role in delivering the vaccine to Italians. Up next, though, we continue talking about the block trade saga with BNY Mellon's Jeffrey Yu and Bloomberg Opinion's Julie Wren. Get in touch, IB Plus TV Go. You can ask me questions. You can ask questions through me to our guests. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think we are seeing a bit more in terms of drips and drabs, but I think the main bulk of it has been digested. We're just not seeing the kind of crazy activity that we saw on Friday. As far as we can tell, those seem to have abated for now, but it's way too early to give a full all clear.
Well, some of our guests are talking about the crazy block trade activity that we've seen. Of course, a quote is from Steve Sosnick saying that, well, it's too early for a full all clear from exactly who's been affected. He's an Interactive Brokers chief strategist. So let's get more on Archegos. When are we going to get the all clear from the Archegos implosion? Joining us is Jeffrey Yu. He's BNY Mellon senior strategist for EMEA markets. Jeffrey, what I'm still trying to get my head around is whether it's symptomatic of some of the risk taking out there by Wall Street banks or something out there on the markets, or whether this is just an unfortunate bad bet gone wrong.
I think the main question people are going to ask on a macro level are two words: shadow banking, right? So how much shadow banking has been allowed by the easing in financial conditions over the last few years on a structural level, since the global financial crisis, and we had an additional dose of that due to the stimulus from the pandemic response. Now, real yields are rising. We're seeing the move in the 10-year. Several central banks globally are thinking about tightening. So are we going to call a top in leverage and shadow banking in liquidity, and what are the consequences, right, on a macro level, on a micro level? I think these are the questions that people are going to move on to over the coming weeks and months.
So, Jeffrey, how much do you worry about shadow banking? This is, do we need to look at shadow banking in the U.S. more than shadow banking in China, where we usually look to?
It's interesting. I do think regulators globally should borrow a phrase that Chinese regulators have been using for a long time now, which is grey rhinos, right? It's something that you absolutely know is there, that they're very, very focused on it, but it's also one of those things where you don't know how big the problem is until you actually find out. And the hope is, by then it's not going to be too late. But again, globally, I think, again, regulators are going to be taking a very, very close look at this, see if they can identify those grey rhinos, bring them out into the open and make sure that it can be contained, but there will always be a measure of uncertainty, and I think that's going to hang over the markets for some time to come as we approach normalization, or if we approach normalization. That's something the Fed is still pushing back against.
But Jeffrey, overall, if you look at Archegos, do you think it could actually hurt the world economy at the margins? Is there something systemic? I know it's early days, but through what lens do you look at this?
I think I look at this through the lens of how markets are positioned in general and what the reaction has been so far. Everything feels contained at this point, but the broader story again is when we have a confluence of factors, and in particular it's more important to look at through the lens of rising real rates in the US, so the move in the 10-year. So if that is still going to move further, are there going to be, I would say, other pockets of leverage of shadow banking which will be actually which will start to unravel? I think that's going to be the broader context here. So I think it's going to be another element into the policy decisions and that central bankers are going to make. Is it going to influence them? That's the key question for the time being. I don't think so. It feels contained, but again, close monitoring absolutely is warranted.
Jeff, when are you expecting actually central banks to start normalizing? We talk about the 10-year yield and inflation day in, day out. Are we going to be able to look through this inflationary bout?
It's really central bank specific. I'm just looking at the Fed right now. I think their communication has been very, very clear. Any short-term inflation rises, that's going to be looked through, and they're going to view it as transitory. Let's wait for how European numbers progress. German CPI today, HICP is expected to come in at 2%. The ECB absolutely is going to look past that. And you know what? Your markets believe that the ECB is not going to move anytime in the near future, but they do question the Fed. They will question other central banks like the RBA, like the RBNZ. So it's a bit of it's quite uneven right now, but ultimately a lot will depend on how this Fed approach works. Will the markets challenge it again in the same way that we saw in March? I think that will determine risk appetite over the coming months.
Are you expecting, Jeff, the markets to challenge the Fed once more?
If we do get signs of proper reflation in the US, and I think there will be points over the next 6 months whereby if this infrastructure push actually does come through and we see clear signs through the payrolls data, maybe this week is going to be an early indicator, but through the payrolls data of sustained gains in wage growth, I think that is going to be the point to get new changes to the Fed. And the Fed will have to look at its own projections and say, is it okay for them to shift things slightly, for them to actually believe the markets can take a move towards tightening? That's the determination going to make. But yes, I do think more challenges will come over the coming months and quarters.
Are you expecting, Jeff, markets in general, partly because of what we saw, so the unwinding positions, partly because there could, I guess, be more Kegels out there, we can't rule it out. Are you expecting a lot of volatility in the markets?
I am actually, insofar as if I look at our iFlow data, for example, just looking at FX, the number of currencies probably funded out of dollar trades, which are still overheld, so markets are still long in Asia, in particular, Asian currencies. There's a lot of holdings there. They are starting to lose some degree of profitability, so they are vulnerable. So if we don't get a stronger Asia recovery story, be it out of China or elsewhere, while the US recovery story continues apace, I do think these positions are vulnerable. And on the flip side, if I want to get back into risk, if I want to be risk on, are there a lot of, say, risk assets, risk currencies in particular, which are heavily under-owned, which could come back? Not really seeing those at this point. So I think the price action in March, and that may yet continue over the short term. This is more tactical rather than structural, but I would be wary of jumping back into full-on risk anytime in the near future.
Jeff, thanks so much. Jeff Yu there of BNY Mellon stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Joe Biden says that from April the 19th, 90% of U.S. adults will be eligible to get a COVID-19 vaccine. His administration is also more than doubling the number of pharmacies where jabs are available. But the president is warning against complacency as case numbers are rising again. Now, Prime Minister Boris Johnson says the UK is on track to entirely lift pandemic restrictions over the next 3 months. He's hopeful the country can avoid another lockdown with infection rates at their lowest in 6 months. The Prime Minister says the main risk is a new vaccine-resistant strain emerging or coming into the UK. And after almost a week, ships are moving in the Suez Canal again. The Ever Given has been freed, clearing the way for traffic to resume. Authorities expect operations to return to normal within days. The Suez Canal is a conduit for about 12% of global trade and about 1 million barrels of oil a day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up with contagion from the margin mayhem looking contained, reflation is back in focus as yields spike around the world. Germany also announces that it's bumping up its bond sales. That conversation is next, and this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, bonds from the U.S. to Australia to Germany have started the week with a hit, a warning that this year's sell-off has further to go. Now, block trades in stocks and the freed Suez tanker does not seem to have changed the outlook for reflation. Instead, attention is turning to President Biden's infrastructure plan on Wednesday and the German government's announcement that it will boost bond buying in the second quarter. Well, let's get straight to Jeffrey Yu of BNY Mellon, who's still with us. Jeff, we're talking a little bit about what it would take for central banks to actually start normalizing policy. If you look at the COVID vaccine and the recovery, what are you seeing in terms of market movements over the next couple of months?
I think the vaccine leaders, the vaccination leaders, they still are going to be very important in driving central bank policy because vaccine leadership does also mean that societies can actually start to recover. Recovery means stronger jobs market, stronger labor market, and ultimately that's what all central banks are looking for. So those countries whose labor markets can heal on a sustainable way the fastest, those are the ones you want to identify as being the early movers in policy tightening.
What are you expecting the ECB to do, Jeff? So if you look at euro resilience, is that going to be a concern for the European Central Bank, and what can Christine Lagarde do about it?
Yes, if you get euro resilience or a stronger euro at a very fast pace, they're going to have to start to talk it out again. We do think that right now they may have to err on the side of using more gentle rhetoric. Of course, at 117, there's no reason for undue alarm, but they have to guide euro not exactly lower, but at least limit its appreciation to make sure it doesn't eat into its inflation forecasts. They're already quite fragile. If you look at their downside scenario, not their base case, the downside scenario, we could see inflation barely hitting 1% over their forecast horizon. So the room for appreciation for the euro right now, beyond 121, which was in their forecasts as well, the anchoring assumptions, is very, very limited.
Jeff, I'm looking at one of our top read stories, which is how we started this conversation on yields actually climbing with equities on the growth outlook. At what point do central banks need to start doing something? So we've heard a lot of rhetoric, and this is what we were also talking about before from the Fed and other central banks saying, you know, they're looking past these rising yields. At what point do they actually need to do something?
At the point where I would say maybe you have 2 or 3 quarters or even a bit longer worth of sustainable income growth, because that's when you start to identify the point of A, the economy reaching escape velocity, and B, where you have very, very strong consumption and demand. Now, most central banks are willing to err on the side of caution. You know, people have to worry about the pandemic coming back or new waves, and so they're cautious. One exception, I think, is the Bank of England and Dr. Haldane's a rip-roaring economy, that £250 billion waiting to be spent, and could that actually help boost the economy into escape velocity? I don't think you're going to hear anyone from the Fed calling the US economy rip-roaring anytime soon. So it's an interesting approach the BOE are taking. But if they're right, then sterling has scope to rally across the board. So that's another central bank willing to exit early, worth highlighting.
Do you think they're right, Jeff, or Mr. Haldane's right? Could it come, you know, we don't know about variance, I guess. That's the big unknown.
Mm-hmm. Right. Mm-hmm. So I'm willing to give him the benefit of the doubt right now. So on balance, I think euro sterling lower is actually a viable trade. And the one concern, however, is, and he had highlighted this himself, yes, there's a lot of savings, pent-up savings, but the distribution of those savings, you know, that we need to be a bit more careful. It's going to be concentrated within the people who were not really affected, who are going to be able to spend anyway, right? Then the net push for the economy may not be as strong as he's anticipated. But overall, again, I think the BOE willing to stick their heads out there is brave and interesting.
Thank you so much. Brave and interesting. Jeff, thank you so much. Jeffrey Yu there, BNY Mellon, Senior Strategist for EMEA Markets. Now, coming up, Italy's largest logistics operator, Poste Italiane, eyes a big jump in profit and dividends by 2024. We'll be speaking to the chief executive on the company's strategic plan. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Friday, a Bloomberg Television exclusive, a conversation with Baidu co-founder and CEO Robin Li.
We're far from done. We will continue to invest for the next 10, 20 years.
Watch the full interview only on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Archegos breaks its silence over the block trade saga. It says all plans are being discussed as regulators summon the banks over the blow-up. Wells Fargo and Morgan Stanley are the latest to add to the sell-off while they execute more than $2.5 billion of trades on Viacom, Baidu, and others. And JP Morgan says the industry could face losses of up to $5 billion from the unwinding of Archegos positions. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance, the early edition on this Tuesday, the 30th of March. So today's top story is a block trade blow-up, and investors are wondering now what the recovery rate for Huang's holdings will be. In her latest Bloomberg opinion piece, Shuli Ren argues that it's all about speed. Those banks who move the fastest will actually end up with the smaller losses. Well, joining us now is Bloomberg's opinions, Shuli Ren. Shuli, thank you so much for joining us. This is about the speed of the unwinding, or are there actually other factors? What do we know the banks did on Friday?
Well, absolutely. If you just look at Bill Wan's portfolio, right? He's not buying your normal big tech fan stocks. He bought smaller companies like Viacom, Discovery, and then a bunch of Chinese internet companies that few of us have heard of. Just Tech EDU, VIP Shop, Tencent Music. Well, that one's slightly bigger. And the problem with these stocks is they don't have very good liquidity, right? So the banks that got to sell first, basically Goldman started the exit first, and then Morgan Stanley followed. They have okay recovery in the sense that there might still be some buyers. But by this week, those who wanted to buy on dip already bought, and then the rest, they just have to fire sale. Especially those Chinese companies. The SEC is already going to start delist them. Do you really want to own these stocks? So I think those who exit later, they're going to soak up most of the losses, whereas Goldman will come out just fine.
Shuli, in your previous column, you warned of more pain ahead in the hedge fund industry. How much pain could we get? How big could the fallout actually be?
I think, fortunately, Bill Wan's positions are not in the mega cap stocks. So most hedge funds, if they really just are into mega caps, they're fine. But starting this year, a lot of hedge funds, they started to buy into those laggards, last year's laggards that are playing catch up, like the media companies like Viacom and the Discovery. They're pretty popular hedge fund bets. So I think some funds will get a little bit of margin calls themselves. And then again, there are Chinese internet stocks, and they can be smaller hedge funds' favorite playgrounds because they're volatile. The share prices are volatile, and they can have very massive gains. So maybe some smaller funds will also get a margin call.
But Shuli, is this what we're calling shadow banking? Is this actually the crux of the matter, and regulators don't really know who's lending to what and how big some of these funds are?
Yeah, family office, but and then prime brokerages using swap trades to hide their positions. Yeah, in a sense, yes. But I think fortunately, the regulators, if we're talking about central banks, they should have a good view on the bank's overall health of their balance sheet. The bigger problem though is that some banks' annual 2021 earnings will be wiped out. Credit Suisse, for instance, they made less than $4 billion last year. So if their multi-billion-dollar write-downs on top of the Greensill fiasco. They're not going to have any earnings left this year or bonus for the bankers. I think that's the bigger issue.
Thank you so much, Shuli Ren there from Bloomberg Opinion. Now, Italy's budget deficit is likely to be close to 10% of GDP for a second year. That's according to Bloomberg sources. A slow vaccine rollout and persistent lockdowns have forced the country to boost spending. The Prime Minister Mario Draghi is due to present new public finance targets in mid-April. Now, Poste Italiane is also the largest logistics operator in Italy. Joining us now is Chief Executive Matteo Del Fante to discuss the company's strategic plan. Mr. Del Fante, thank you so much for joining us on Bloomberg Surveillance. When you look at your three-year plan, how you're expecting Poste to actually change, where do you think the biggest growth, what unit will make money the most?
Yeah, good morning. I think in the next 4 years, it's certainly going to be the insurance side of our business. We're the largest Italian life insurance company. And together with it, the payment segment is growing very fast, and I think the pandemic has actually helped that market doing an extra step that Italy is behind. So there is room to increase our digital payments and obviously e-commerce, where we are the biggest B2C distributor, and we plan to keep this leadership.
With your move on energy, are you planning to become a multi-utility company?
Yeah, I mean, our plan already in 18 was around clients. So our value is our clients, and there is a liberalization process taking place finally 1st of January 2022. So we announced that we will be ready for that date to sell gas and electricity to our clients. There are over 750 Italian companies active in the energy selling business, and I think there is plenty of room for us with our trust and our client base to make some good business there.
So in the energy space, are you relying on your current infrastructure, or would you even consider acquisitions to boost some of the services there?
No. I think the asset we have is clients. There is a wholesale market where you can buy the raw material, which is gas or electricity, and all you need to do is to have, in between the raw material and the use by the client, a billing, a back office, and a machine that does the work. So, don't need to rely on third parties or distributing third parties' products.
Mr. Del Fante, are you in conversations with GDP to manage postal savings of Italians?
Yeah, we're always, we've been for the last 150 years. So we keep distributing as a service that us and CDP, together with the Italian state, have to do by law. So it's a law that is forcing and is allowing us to distribute the products which are guaranteed by the state, and is ongoing negotiations so that we have to define the appropriate amount of fees that are deserved by the distributor.
So give me a sense of where you're expecting these negotiations to go. And overall, Mr. Del Fante, where are we? So we've had a lockdown, COVID. Does that mean that people save less? Have they saved more? And are they ready to spend when you have the appropriate vaccines and things reopen in Italy?
Yeah, we hope ready to spend. For the time being, we are seeing an increase in savings. So net retail savings have gone up last year, and the first 3 months of 2021 are going in the same direction, which is good news for our asset under management, but is not good news for the consumption levels in the country. So we hope that people will find more comfort in using the savings that have grown over the last 15 months around the country.
Is your outlook, given where we are in vaccinations in Italy, which are slow and sometimes painful, and also difficulty of access to doses, is the outlook just as uncertain as it was 2-3 months ago, or is it slowly getting better?
No, it's getting certainly better. We're bang on average in the EU. Some regions are faster than others, but I think this is happening not only in Italy. The latest messages of the last couple of days are reassuring in terms of supply of doses. This will certainly accelerate the process, and that's certainly the good news that everybody's waiting for.
What's your biggest concern? What's your biggest challenge? I mean, we were looking, I think, at live pictures of Mario Draghi and his wife actually receiving their first jab by AstraZeneca. You're working on energy, you're dealing with, of course, the to and from packages, and you're dealing with everything in between, including savings. What do you need from the government today to make your job easier?
I think we need stability, which we are seeing at the moment. We need clear directions that we see also in terms of the use of the European resources, which are very important for the country. And if we see this clear direction, we can play a role as a company for the benefit of our shareholders and stakeholders. But in doing that, we're certainly also helping the economic system to get more modern, more digital, increase productivity, and bring the overall citizens and companies to a more modern world down the road.
Matteo Del Fante, thank you so much for joining us. He's the Chief Executive Officer of Poste Italiane. Now, you may remember him as the Chief Executive of BT, but this man is one of the top bosses at Salesforce now. How did Gavin Patterson transition from the ultimate British legacy company to spearheading an American cloud-based software company? We speak to him next, and if you have any questions for him, you can IB me or you can IB the team on IB Plus TV Go. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Food delivery startup Deliveroo is expected to price its IPO at the bottom of the range. The listing has been plagued by a growing list of funds saying they will not buy shares. That is over concerns the company's treatment of couriers does not align with socially responsible investing practices. Now, Chinese smartphone maker Xiaomi is said to be planning its biggest overhaul ever to enter Chinese booming EV market. Bloomberg has learned it is set to invest about $15 billion over the next 3 years to manufacture electric cars. It's joining the likes of Apple and Huawei in betting the cars of the future will grow increasingly autonomous and connected. And Nissan's former top lawyer, who led an internal investigation into alleged financial misconduct by Carlos Ghosn, is speaking out. He says he endured retaliation, demotion, and even corporate surveillance of his family after questioning the integrity of the probe.
I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling. You know, this isn't a car company. This is not the KGB.
You can watch that full interview on Bloomberg Quick Take Storylines. Nissan contests the claims made by the former general counsel. A spokesperson says it's unable to comment further due to ongoing litigation. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the U.S. vaccine drive is starting to see success. Joe Biden says that 90% of all U.S. adults will be eligible to get a shot by April 19th. Companies are preparing for a new post-vaccine normal, and that's a reason for optimism, according to Salesforce. The U.S. cloud software company says it is creating the operating system for the new way to work, which it hopes could be crucial to both the global recovery and its own growth. Well, joining us now is Gavin Patterson. He's Salesforce President and Chief Revenue Officer. Gavin, thank you so much for joining us. When you look at the new way we work, the new way we use our digital economies, how has it changed in the last 12 months? Will we ever go back to what it was like in 2019, or is this now a change for good that benefits Salesforce?
Well, good morning, and thank you for having me on the show. I don't see us reverting back to the way things were. I think things have changed fundamentally. I do think the office is going to play a role. There's no question about that. But it won't be in the way it was central to everything in the past. So if I look at how Salesforce are planning to go forwards, we're looking to create a sort of hybrid model, if you like, probably up to 3 or 4 days a week in the office and some flexibility outside of that. And I think the office will increasingly be used as a place to collaborate, not just with colleagues, but also with customers. So much more flexible a way forward.
I know you've launched new products to basically deal with governments having to deal with the vaccine role and things like that. How many new products will we see from Salesforce in 2021?
Well, the company is built on innovation, both organic and inorganic innovation. And some of the products you've just mentioned, Vaccine Cloud, for example, is a great example of that. Over 40 government agencies around the world are using Vaccine Cloud, which is based on Salesforce software, to manage the deployment of vaccines in a fair and equitable way. And that's just one example of it. And that was a cloud that was created in a matter of weeks. Work.com is another example of this, which we created halfway through last year to help companies and more generally organizations manage the return to work in a safe way. So the company is built on innovation, it's built on agility, and it will continue to innovate because that's the reason why it's been growing at 20% a year for the last 20 years.
How do you plan to use Slack after the acquisition?
Well, I think the Slack acquisition is a really exciting one. It's rarely in my career have I come across a product that is so popular, has so much advocacy with its users. But I think if you combine Slack with Salesforce, and particularly the Customer 360, that single source of truth that Salesforce customers have around their customer, you get this fantastic way of collaborating. The the data on one hand, that picture of the customer, plus with Slack, a way of interacting and collaborating with colleagues both inside the company and outside the company. I think it's going to be an incredible proposition for customers.
So are there any specific products that you think you'll be able to sell through it?
Well, I think we're already in partnership with Slack today. So the acquisition hasn't closed, but we're confident it will over the next few months. But in the meantime, we can work in partnership and create products that combine the two today. And you'll see those come out over the next few months.
Are you concerned at all about the end of third-party cookies? Does that give a competitive advantage to Google?
Well, we don't compete directly with Google. We're much more of fundamentally a B2B company, enabling other companies to transform themselves digitally. So, from our sense, it isn't a big issue, I think, ultimately. But what we want to do is ensure that companies can truly take advantage of the digital imperative that every company, every organization is facing at the moment. I mean, that is the big story of the last 12 months. If you didn't have a digital strategy in the last 12 months, you didn't have a strategy. And that's why I think Salesforce has become more relevant than ever.
How worried, I mean, one of the questions, Gavin Patterson, that we have a lot by clients and people watching is, how can we be sure the cloud is secure? How much of your efforts are actually ensured, or to making sure that it is secure and that people know it's secure? What if there's hacking? What if something happens?
Well, we take security very, very seriously. Salesforce is a values-driven company, and the number one value is trust. So we continue to put significant investment into our defenses around security and ensuring that the clouds are safe. And in many ways, I think as we migrate increasingly to a public cloud network, in many ways, public cloud is safer than private cloud because it doesn't isolate your data all in the same place at the same time. So I'm confident that the company is making the right investments. We're not complacent, but we recognize it is a key concern for clients. And without that trust, we don't have a business. So that's how we see it. We see it as fundamental to what we offer, and we'll continue to make the investments to make sure that both clients and their data feel as though the client's data is absolutely safe, and we're really, really sure about that.
Gavin Patterson, when you look at the Salesforce technology being used for vaccine tracking and vaccine management, how long do you expect that to last? Is it something that you're having conversations that we could be in vaccine tracking or even booster shots for the next 2 to 3 years, or do you have any insight on how that works?
Well, I think what I'm seeing is, and particularly in the US, that actually as vaccines get rolled out, business is getting back to normal, or a new normal, if you like. And so business is really opening up again. But I don't see that personally as a sign that, the pandemic is behind us. There are going to be many wobbles, if you like, or reverberations over the next few months and even quarters. And my sense is we're going to continue to need to be vaccinated against different COVID variants for a number of years. In the same way we've been vaccinating against flu for the last 10 or 20 years as well. So I think it'll just become part of the new normal, and that's what you'll have every year as part of your normal healthcare process.
Gavin Patterson, thank you so much for joining us today. He's a Salesforce President and Chief Revenue Officer. Now, all plans are being discussed. Bill Hwang's Archegos breaks its silence on the block trading saga. The SEC summons Wall Street banks. We'll have more on that next, and this is Bloomberg.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're looking at some of the latest news after our key ghosts and more banks continuing to try to unwind their position. We just learned that MUFG saying that they see about $30 million worth of losses tied to U.S. hedge fund clients. We're not naming names, but we know Goldman Sachs offloaded some positions as well as Wells Fargo yesterday, Francine.
Thank you so much, Danny Berger there with the very latest on some of these banks and block trades. We'll have a full roundup, of course, of what we heard at our key ghosts and maybe regulation going forward. Bloomberg Surveillance Early Edition continues in the next hour. I'll be joined by Matt Miller and Kaylee Lyons out of Berlin and New York. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
can't explain NEOM on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening, buzzes all around you here.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going. But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
There's risk out there. You've got to know the firms you're dealing with. You have to understand the leverage that they're utilizing.
It normally takes some time for the bodies to float to the surface, for these things to percolate through the system.
As far as we can tell, those seem to have abated for now, but way too early to give a full all clear.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning, everyone, from London, Berlin, and New York on this Tuesday, March 30th. Our top stories today. Archegos breaks its silence over the block trade saga. It says all plans are being discussed. The regulators summon the banks over the blow-up. Wells Fargo and Morgan Stanley are the latest to add to the sell-off, while they execute more than $2.5 billion of trades on Viacom, Baidu, and others. And JP Morgan says the industry could face losses of up to $5 billion from the unwinding of Archegos positions. A lot going on, of course, with our top story, Kaylee. I know the markets are looking at the next unwinding phase, if there's one, how much it will cost, but also regulators looking at how they can avoid it next time around.
Yeah, I think the how much is left to be unwound question is really key, Francine. That is something the market is very tuned into. But I would say any risks around this largely were overlooked by most of the world. In the Asian session, it was largely green across the board. The CSI 300 in China up by 1%, a little bit of outperformance coming from Hong Kong stocks as well, where the underperformance on a relative basis at least was Japanese stocks. The Nikkei was actually really dragged lower by the banks. The Nikkei 500 banks index was down about 1.3%. Of course, Nomura still grappling with the fallout of Archegos, and you had MUFG warning of losses tied to a U.S. client as well earlier on. I also want to point out the dynamics in the FX market because the dollar-yen story is really interesting. You have dollar strength stemming from higher yields. Demand for the safe haven yen really is coming down, and that has dollar-yen through 110 for the first time since January of 2020. In the European session, we are looking at a pretty green story as well, really across the continent, including UK stocks, which are actually higher after underperforming yesterday. At the moment, the stock 600 is higher by around 0.4%. And interestingly, unlike Japanese banks, you are seeing a rebound in some of the European banking stocks. The stock 600 bank index right now up by 1.8%. It seems that any risks to European banks stemming from Archegos really at this point is quite limited to Credit Suisse. So that may be giving a boost to sentiment here. And we have to keep an eye on the bond market story as well. Both core and periphery yields spiking higher today. The 10-year German bond yield up nearly 6 basis points. We're just around negative 26 basis points at this point in time. Here in the U.S., unlike Asia and Europe, it's looking like it may be a softer open. Futures are in the red, most notably on the NASDAQ 100, down about 0.6%. This is predominantly seeming to be a higher yield story. The 10-year yield spiking 6 basis points at this point. We are nearing 1.77%. Part of that is optimism on the vaccine story. The other part, optimism about more trillions of dollars in long-term economic spending set to be announced by President Joe Biden tomorrow. And with that move higher in yields, with that optimism around the vaccine and recovery story, we are seeing gold under pressure. We are sub $1,700 an ounce for the first time in about 3 weeks, Matt.
Very interesting. Gold has been an interesting trade to watch. I think the optimism, though, really is the word to watch right now because of the green we saw you showed on screen for Europe, even though you've got futures down a little bit. We just got a headline, Euro area March economic confidence rising to 101, beating the estimate for 96. So at least here in Europe, there's some real confidence pushing through for the ending month of March. Let's take a look at what's ahead today. This morning, we're going to get Germany inflation data. It's expected to increase slightly this month. And of course, we're all waiting for some kind of plan out of Germany to fight the rising infection levels and somehow deliver vaccines. This afternoon in the U.S., the Fed's Randy Quarles and John Williams will take part in separate virtual discussions. So we'll have some Fed watching to do. But Francine, really, it continues to be, for the markets at least, focusing on what's still to come, unwinding the Bill Wang, the Archegos trade.
Yeah, I think the focus is on that. I love the fact that, we're spending a good amount of time just figuring out how you pronounce it. But given that we didn't know about it 3 days ago and it was such a large position, we're okay to call it whatever we want. And this goes back to something that, Jeffrey, you told us from BNY Mellon, is that it goes back to shadow banking, which is the nightmare of central banks. It could, on the back end, just say, actually, how big is shadow banking? And was
Yeah, absolutely.
We'll
the focus is going to be on the leverage and the regulation. I think probably the most interesting story, although maybe it was expected, that came out yesterday overnight, is that regulators gathered these. The SEC and FINRA both want to know what's going on. Francine?
Yeah, so Bill Hwang's Archegos breaks its silence on the block trade saga. Stocks at the center of the $24 billion sell-off came under pressure amid concerns of more damage. JP Morgan estimates that the industry could lose as much as $5 billion from the unwinding of positions. Bloomberg's Danny Berger, very latest. Danny, how much more unwinding is there to do?
Well, there certainly is more, because you have to remember that Goldman Sachs on Friday was really the first out of the exits after what we learned was a call between banks and the prime brokerages saying, okay, don't move yet, but Goldman breaking ranks. So if you're still left to sell into this market, you face a much more difficult environment, considering most of these shares have already moved. Of course, pre-market, not a lot of reaction from the banks. Goldman did say that any losses are immaterial. You compare that to Nomura and MUFG today, saying that they face about $300 million worth of losses tied to a fund client. We did finally hear from Archegos issuing a statement, not too much detail there, but just saying that it's looking at options. All plans are being discussed, determining the best path forward. In the meantime, that scrutiny question is going to be a big one. Of course, these weren't big macro positions that'll have a big contagion effect, but there was a lot of leverage because it was swaps. There wasn't a lot of disclosures. Of course, also a family office. So another question, do family offices, especially of this size, need to report more to the SEC and regulators? Francine?
Danny, thanks so much. Our Danny Berger there with the very latest on Archegos. Now, the long-awaited results of a study into the origins of COVID-19 have been released by China and the World Health Organization. The findings state that the coronavirus probably spread from bats to humans via another animal. Well, let's get straight to our Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst, who joins us now. Sam, the focus is firmly on the U.S. actually vaccinating many people, 90% of adults by April 19. Do we care where from to give us an indication, actually, of how we stop future pandemics?
Good morning, Francine. Absolutely. That is the point of the whole exercise here. It's not witch hunting, which I think there are still people who are trying to pin it on a lab or something like that, which would be amazing if some groups of scientists were able to engineer a virus with all the characteristics of this thing. Then I think they should win the Nobel Prize. But in reality, we need to know so that we can watch out for the next one. And unfortunately, I'm not sure we will ever know the full answer. And the next situation will probably arise from a completely different direction. So,
Sam, I want to shift focus to the trajectory of the virus here in the U.S. because yesterday we heard from CDC Director Rochelle Walensky issuing a pretty emotional warning about the way things are going right now. Take a listen.
Lose the script, and I'm going to reflect on the recurring feeling I have of impending doom. We have so much to look forward to, so much promise and potential of where we are, and so much reason for hope. But right now, I'm scared.
So, Sam, she's warning of impending doom. At the same time, President Joe Biden is saying 90% of adults will be eligible for the vaccine by April 19th. I guess the question is, can that vaccination effort keep up with the virus enough to avoid a fourth wave here in the U.S.?
Yes, so this is a very, very difficult subject to touch on because everyone's exhausted from the pandemic. They see vaccines with their efficacies and all the lovely things we hear about, how much they reduce transmission or disease in healthcare workers or in Israel. And on the other hand, we're told that we have this situation that we still need to keep masking and keeping distance. So, but the reality is, we're only just over a year from having identified this virus. I think we have to have some humility in understanding that even though we've been incredibly lucky in getting the vaccine and the progress that we've made, is that we can't take our foot off this accelerator brake, whichever way you want to put it. We have to be diligent. The virus will find a way and could always surprise us. So I think let's get the vaccines in, then start partying.
Yeah, too early to let our guards down. Thank you so much to Sam Fazeli of Bloomberg Intelligence. And I do want to take a look at some stocks moving in pre-market trading in the U.S. because a number of them are tied to this COVID-19 story. On the one hand, you have Abcelera, which is the big outperformer before the bell. It's up more than 16% in pre-market trading at this point in time. Plus, you're getting a nice boost for some of the travel stocks as well on vaccine optimism. The likes of Carnival Cruise Lines higher by about 1.2% at this point. But with that positive story on the vaccine, with optimism around infrastructure, we are getting higher yields, and that is weighing on some of the richly valued tech stocks within the market. Tesla, for example, down 1.7%. Those higher borrowing costs, Francine, call those lofty valuations into some question.
Yeah, so much, actually, that we still need to figure out exactly what's been going on. We'll ask, of course, and have a conversation on the markets, Kaylee, with Patrick Armstrong, Plurimi Wealth Chief Investment Officer. I'm looking forward to what he has to say about Archegos, rather. We have a definite pronouncer now on how we should be pronouncing it. Later this hour, also inside Nissan's battle with Carlos Ghosn, a whistleblower speaks out. We'll bring you details on how the Ghosn saga unraveled. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, this block trade saga has been compared to long-term capital management in terms of the collapse and its reverberations. We have yet to see if it's going to go that far, but the immediate question is how much still needs to be unwound. We have already seen an absolute ton of volume, as is illustrated by this chart. You can see that yesterday we had, of course, soaring volume, and then today, once again, just a ton of volume in these stocks, Viacom, Discovery, GSX, etc. When will that peter out? Then the longer-term question is, what are the regulatory consequences going to be, Francine?
Yeah, what are the regulatory consequences? And actually, what is it that we're looking at? How much more unwinding is there? Joining us this morning, Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Patrick, first of all, is this shadow banking? And if it's shadow banking, could it be something much bigger than we're looking at? Could it be something that's systemic, that regulators should take a look at now?
It's probably fair to call it shadow banking. A lot of trades not done on the exchange, just with agreements between the counterparties, the bank and the hedge fund itself. I've heard analogies comparing it to long-term capital management, and I think that's way off the mark. I think the banks that were providing leverage to LTCM basically were thinking it was a risk-free trade, almost sovereign debt, just geared massively, PhDs and Nobel laureates with their risk models. But there's no way a bank can be extending leverage on these kind of high volatility stocks with implied volatility of 40 to 80% on some of them and not know there's a significant risk. So the banks extended a lot of leverage. There's no model they could have had to say that there wasn't a big risk they were taking there. So it's not they were taking unintended risk. They took a risk, they expected to be compensated for it. And the knock-on effects are on these companies specifically, on the equity market. It's not on treasury markets. It's not moving currency. So I don't think this is a systemic risk for markets at this point.
But should regulators, I mean, these were derivatives that were actually hidden from public view. Now, we're not going to make a moral judgment on it, but it's something that regulators will look at.
I think obviously anytime anything's front page news, regulators end up looking at it, and I'm sure there'll be testimony in front of Congress, and the banks will be changing their risk management procedures probably as we're speaking right now to make sure that these kind of things don't happen again. You've maybe questioned the whole bank's financial model and profitability model as we've been doing for the last 12 years since 2009. Regulations probably will come into place because of this. That'll impact banks' profitability. But the goal will be to stop these kind of risks happening and make them a little bit more transparent.
Are there more whales out there, Patrick, with the same kind of leverage that Bill Wang had?
Probably. It's interesting that this is happening in a bull market. The S&P made an all-time high on Friday last week. The stocks that he was long have suffered some weakness, basically, as momentum moved a very powerful force for these stocks and turned into a significant headwind for them as the momentum trade unwound and went the other direction. When you're in a bull market, you'll never see the full extent of these kinds of positioning because if you've got these specific stocks, you'll see the weakness right now. But there's probably hedge funds with very similar amounts of leverage with different kind of stocks, and it's just not apparent right now because the market is drifting higher. So I'm sure there's probably too much risk anytime you've got a period where market's just rising, liquidity's abundant, and momentum has been in your favor generally. It is an environment where hedge funds like to take a lot of risk, and they'll take as much risk as banks let them take.
There's an interesting question as to how much Wang himself was moving the market. I mean, Viacom, if you look at a year-long chart of Viacom, it's just amazing the run higher, and Goldman Sachs and Morgan Stanley were listed as the two biggest shareholders because of the way that he structured these trades. Then they get to 85, and the execs at Viacom say, let's cash in on this, right? And they sell shares. That's the trigger point for the downturn. And that's the concern, right? This kind of hidden move can catch people by surprise.
It can, and I was actually on the other side of Viacom. I closed my short as it started to run up, and once GameStop happened with its short interest, I started to look at my holdings that I was short of, and Viacom was one of them. So luckily, I closed it fairly early. I took a bit of a hit on that one, but the short squeeze pushes things higher than they should go, and then companies that make sound decisions, the board of governors, CEO, and chairman say our share price, we should monetize this right now, the big moves we've had in our share price. That creates new supply of shares, and then shorts aren't going to be squeezed because you've got that new issue of shares. So supply demand has its own mechanisms to even it out, and I think companies acting completely appropriately. When you get to a point where your share price doubles in the space of a few months, you probably makes a lot of sense to improve your balance sheet and raise some funds for development in the future.
Patrick, speaking of things that have moved higher at a certain degree of velocity, I want to get your take quickly on Treasury yields, because we are seeing a pretty major spike in the bond market today. We're sitting at 1.76% on the 10-year, and I've had a number of conversations over the last week that 1.75% was the near-term top. If it wasn't, what is going to be?
Yeah, I came into the year exactly thinking that the Treasury yields would get to 1.75%, and then there'd be some sort of pain threshold that Powell would indicate Treasury yields are having a negative impact on the basically financial conditions, and he would just use words to basically sort of soft cap them there. What he came out in March said, he's not worried about Treasury yields right now. He's going to maintain the front end being very low. Inflation's in the post. We've got a very low base for the next 3 months with low oil prices this time last year moving sharply higher for the rest of the year. So inflation will be coming. Powell said he's going to look through it, and he doesn't seem concerned about 10-year yields. So I think the path of least resistance is higher yields. We're in a reflationary backdrop, and Joe Biden's spending everything he can. He's got a stimulus package. The COVID relief has already happened for $1.9 trillion, and he's got a big infrastructure plan, and that's going to be a blowout on deficits and debt. And there's 25 trillion treasuries available right now. By the end of the year, maybe you're getting closer to 30 trillion treasuries, and for every treasury issued, you need to find a buyer, and those treasuries are still yielding less than inflation.
All right, Patrick, thanks so much. Patrick Armstrong, their Chief Investment Officer at Plurimi Wealth. Now, later today, conversations on cryptocurrencies. We'll be speaking to Jesse Powell, the Chief Executive of Kraken, one of the largest and oldest Bitcoin exchanges in the world. That's at 5:30 p.m. in New York, 10:30 p.m. in London, and this is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds at the
the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Now let's get straight to the Bloomberg First Word News, and ships are on the move again in the Suez Canal. Now, an almost week-long effort to dislodge a giant container ship stuck in the canal finally succeeded. Authorities expect operations to return to normal within days. Hundreds of ships were forced to wait in line. In Turkey, President Recep Tayyip Erdogan resumed his shake-up at the central bank. Erdogan appointed a Morgan Stanley executive to the bank's interest rate committee. Mustafa Duman was named a deputy governor today, while just over a week ago, Erdogan fired the third central bank governor in less than 2 years. That shocked investors and sent the Turkish lira falling. In Italy, Bloomberg's learned that the budget deficit is likely to be close to 10% of GDP for the second year in a row. Successive lockdowns have forced an increase in government spending. Well, the Prime Minister Mario Draghi will present new public finance targets next month. The forecast also will show that the economy growing just 4.1% this year compared with the prior outlook for 6%. And the shares of the Chinese parent of TikTok are trading at a valuation of more than $250 billion in the secondary market. Well, Bloomberg has learned that ByteDance value has surged in recent weeks. Investors have gained confidence buying the business. ByteDance founder has weighed options for an IPO. And this goes back to whether Kaylee and Matt actually have a TikTok account. I haven't been able to find out yet, but certainly it goes to the valuation if everybody on Bloomberg has it too.
Is it still a thing? Is TikTok still, like Snap was a thing for a while, and I'm not sure if it still is. Kaylee, is TikTok still
I think if you ask my
do?
23-year-old sister, TikTok is definitely still a thing that people do, or at least people her age do.
Well, I find it cool. I feel so young, Kaylee. I feel like that was a backhand compliment. Thank you. Coming up, the Archegos capital fallout continues as Wall Street crunches the numbers. We'll have more on that. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Matt, we're looking at Archegos. We still don't we don't really know how to pronounce it, whether it's Archegos or Archegos, but we're trying to figure out whether regulators will slam down on it just because it was a lot of derivatives that were actually hidden from public view, and whether there's more unwinding to come, and even if there's more Archegos out there.
Yeah, absolutely. I mean, that to me is the most interesting thing. Are there other big whales out there with a ton of leverage and, you know, off of their balance sheets onto the bank's balance sheets with these structured trades? And then are banks now working to get rid of other whales' leverage the way they had to do in kind of an emergency way with Archegos?
Archegos. Kaylee, so the markets are they still in a kind of wait and see mode to see whether there's more unwinding to come?
I think that is the case, Francine. They're trying to digest whatever the implications are of this Archegos blow up against optimism on the vaccine front and also on infrastructure spending here in the U.S., waiting for the announcements, the speech outlining that from Joe Biden tomorrow afternoon. Where that leaves us is in positive territory in Europe. The stock 600 is up about 0.4%, while we're fluctuating between gains and losses in U.S. futures trading. Right now, we're basically flat on S&P E-minis, NASDAQ 100 futures underperforming a bit as we really see the main story of today being what is happening in the bond market. Yields moving higher on the 10-year Treasury by 5 basis points. We are right around 1.76%, the highest level since January of 2020. And with that move higher in yields, we're also getting a stronger dollar. The Bloomberg dollar spot index higher by about 0.2% at this point. As we were just discussing Archegos, that blow up, some of the stocks tied to it I want to check on in pre-market trading. We know Viacom CBS down about 55% over just the last 5 days. It, of course, was subject to some of those massive block trades, but getting a rebound, small rebound this morning, up 2.6% before the bell. Discovery and Baidu, other block trade stocks, each higher by about 1.5% as well. And Morgan Stanley, of course, one of the banks that executed those trades, fell about 3% yesterday. Today, though, it's higher by about 0.8% before the bell, Matt.
You know, Morgan Stanley, I mean, I'd be interested to look at the bank shares. I've got a chart right here of all of the block trade stocks in an unweighted index that Bloomberg put together, and you can see it doesn't look good. But after an incredible climb, right? So they had gone up, maybe fueled by Bill Wang's trades, and are now coming back down. It would also be interesting, Francine, to see all of the banks that are connected and the fallout there, because that's arguably the more important aspect of this. How much are banks holding on their balance sheets that are part of super leveraged trades by big whales like Bill Wang?
Yeah, it's amazing to see it kind of, you know, it's like a slow car crash. We're trying to figure out, you know, what started it, what the unwinding started, and where exactly it ends. So Bill Wang's Archegos Capital Management broke its silence after its soured bets prompted investment banks to hastily unwind positions. Now, the company stated all plans are being discussed as Mr. Wang and the team determine the best path forward. Now, Wall Street is now in the midst of figuring out just how much losses Wang sustained and its impact on the overall markets.
Incidents like this can shatter confidence.
It normally takes some time for the bodies to float to the surface, for these things to percolate through the system.
I think this is very specific, related to one set of positions.
We don't feel that we're at an inflection point at this stage.
We're just not seeing the kind of crazy activity that we saw on Friday.
These events, and we've had them before, you know, this shouldn't be new news.
I think this will blow over in a couple of days.
I would stay out of this for the next couple of days.
There were some pretty good buys to be made on Friday. So you try and take advantage of that.
We see big banks de-risking, and we should take a page out of their book.
And then, and obviously got to keep an eye on, is there more of this to come?
It's way too early to give a full all clear.
Now, for more on all of this, we're joined by Bloomberg's Eric Schatzker, of course, who broke key parts of the story. So, Eric, congratulations on that. I guess the key question is how much more unwinding is there that needs to be done?
Fran, to our knowledge, we have not yet seen blocks offered by the likes of Nomura, although it's possible Wells Fargo was selling off some of Nomura's stock. We haven't seen Credit Suisse in the market. We heard overnight, as you know, that Mitsubishi USJ is facing loss of $300 million, not tied directly by the bank, at least, to Bill Hwang, but it's quite possible that they, too, are sitting on unsold stock. In some, Fran, there are potentially billions, maybe more than $10 billion of Bill Hwang's highly levered positions yet to hit the market, and that helps us shift the focus to exactly where we should be looking, which is to say the prime brokers. Clearly, the Bill Hwang story is fascinating. Who is this guy? Why did he leave so few footprints? And we'll continue to be asking those questions for days. But let me just posit this, Fran, and I know it's been on your mind, Matt's mind, Kaylee's mind. How could that many prime brokers, that many, we're talking about at least a half a dozen, be so dumb as to lever up one guy all on the same stocks? This is a catastrophic failure of risk management 101. That's exactly what the risk managers are supposed to avoid. And the consequences don't just apply to the bank stocks. We all saw what happened to Nomura and Credit Suisse. Look at what happened in the market. What if you were holding Viacom on Friday and the stock traded down from 66 on Thursday afternoon to 48 on Friday morning? That's serious collateral damage, and the onus for that is on the prime brokers.
What if you bought it from Viacom in the secondary at 85 bucks, and now you're looking at 45? I mean,
or you bought it on Monday before they announced the convert when it was at $100.
So real problems there. But Eric, I'm wondering if you or Sri or any of the team have talked to bankers who have said, look, Archegos is a huge problem, and I've done similarly structured trades for other family offices. I need to start clearing all of this out.
You raise an excellent question. How widely used are these total return swaps? And if we now look at a 13F filing by Morgan Stanley or by Goldman Sachs or by whichever prime broker we happen to be talking about, should we now assume that all the shares that we see in an HDS search on the Bloomberg, right, are highly levered positions? They are effectively proxies, right, for highly levered bets by other so-called high net worth individuals. It is a plausible suggestion. We just don't know.
Right.
You have to believe that regulators are now taking a very close look at this and wondering to themselves, what is it about the leverage in the market that we don't know?
Well, to that point, Eric, we know that the SEC and FINRA summoned these prime brokers to have a little chat yesterday about this blow-up. What would regulation coming out of this look like?
Transparency. So what we understand happened in the case of Bill Hwang, and as Matt points out, possibly with many other whales, is that banks use total return swaps so that the client, in this case Bill Hwang, did not have to report his economic interest in these positions. Think of it this way. He owned, what, 100 million shares of Viacom? If we had seen again on an HDS search that Archegos Capital, or however we want to pronounce it, in fact, a Greek colleague of ours told me yesterday it should be Archegos. We'll leave it at that. If we knew that he had, if everybody knew that he had 100 million shares of Viacom, would you have looked at Viacom differently on Monday, Tuesday, Wednesday, Thursday, Friday, before this stock was blown out in blocks on Friday? Of course you would. You would have been asking all the obvious questions. Who is Bill Hwang? What is Archegos? What capital do they have? How highly levered are their positions? What do we know about this guy? It would have been a completely different risk management calculation, as opposed to seeing Goldman and Morgan Stanley as the holders. And so to answer your question, I think it's safe to assume, assuming is always a dangerous thing to do, but that the likely outcome of this will be more transparency in terms of reporting economic interest. So the people transacting in a stock have a better idea who the holders, who really has the economic interest, and can ask, as I say, those necessary questions. How much leverage is built into this trade?
Yeah. Right.
And what might happen if things were to go as pear-shaped as they did last week? This is the what-if scenario that every investor is trying to guard against.
Eric, thank you so much. I mean, this is a problem when you have derivatives that are actually hidden from public view, then you don't exactly know where the risk lies or, what you're looking at. Eric Schatzker there from Bloomberg with a third pronouncer for Archegos from our Greek colleague. Now, coming up, inside Nissan's battle with Carlos Ghosn, a whistleblower speaks out. Our scoop is next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg Surveillance, the early edition. I'm Francine Lachman in London, Matt Miller in Berlin, Katie Lyons in New York. Now, it sounds like something out of a spy movie. Nissan's former top lawyer questioned the investigation into Carlos Ghosn and says that led to retaliation, demotion, and even corporate surveillance of his family. For the first time ever, Ravindra Passi is speaking out. He talked with Bloomberg's Reed Stevenson and Brian Bremner.
Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Ghosn executive conduct matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK.
So Passi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation.
I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. The first time I noticed this was at around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who had spent 16 years at the company.
It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This is a car company. This is not the KGB.
Well, that's a former top Nissan lawyer, Ravinder Passy, speaking with Bloomberg Quick Take. You can watch that full interview online. In a statement, Nissan says it's contesting a claim by Mr. Passy, which contains numerous mischaracterized allegations. A spokeswoman actually says the car maker is unable to comment further on the matter, which is subject to ongoing litigation. Let's get straight to Reed Stevenson. He's Bloomberg News senior editor. He's been following the story from the very beginning. Reed, what did we just see? Is this an accusation? I mean, would it go in the sense that what we've heard from Carlos Ghosn numerous times, which was this was politically motivated by Nissan, or is it much more nuanced?
Yes, what we're really talking about here is a separate sort of issue that came up, which is in the aftermath of the Ghosn arrest back in November of 2018. Following that, there were various things going on at Nissan, including a purge. And Nissan itself launched an internal investigation into the events leading up to Ghosn's arrest. And Ravinder Passy was leading that. It also came to light that some other executives, apart from Carlos Ghosn, were implicated in a stock appreciation scheme, and that became part of the investigation as well. But what Passy discovered was that one of the people, in fact his boss, the head of the CEO's office, a fellow named Hari Nada, was both running the investigation but had also received a plea deal from prosecutors implicating Ghosn and also himself as participating in some of the alleged crimes. So you essentially had a situation where a suspect who had pleaded guilty in exchange for cooperation is also running the internal investigation. And this sort of raised a lot of red flags around conflict of interest, governance issues, and gradually throughout the course of 2019 decided that these need to be brought to the directors for their attention.
So, Reed, to put it simply, the allegation is that Hiroto Saikawa, the former chief executive, and Hari Nada orchestrated this probe to push Carlos Ghosn out, but also were engaged in financial misconduct themselves. Is that correct?
Well, potential financial misconduct, obviously, they both, although Saikawa did later resign from his post as a result, both of these said that these were not anything that they directed happened for them. And so essentially what you had was sort of a second stage where Passy himself became a whistleblower of sorts, and in fact he is pursuing legal action in the UK against Nissan on this very topic. And after coming forth, what you saw and what he told us about is a very swift retaliation. He was demoted, he was followed, and ultimately kind of forced to leave Japan and then leave the company. And really, it really just sort of underscores the fact that there are still a lot of issues at Nissan in terms of governance, oversight, and even conflicts of interest that remain unresolved.
So we've seen Nissan's official response here. Carlos Ghosn, who engaged in this daring escape from Japan and is now in Beirut, has he seen the story? Have you talked to him for some kind of response?
Well, I mean, he has said from Beirut that he's seeking to restore his reputation. There's also a lawsuit going on in the Netherlands. And I think that to a certain extent, he would welcome this kind of story. But on the other hand, we really don't know the full depth of what happened there. And certainly not that anything is black or white.
Reed, thank you. Reed Stevenson there, Bloomberg News senior editor. Now, coming up later today, Volvo Cars USA president and chief executive Anders Gustafsson. That's probably also a story on electric. And chief executive Anders Gustafsson. That's probably also a story on electric cars and battery storage. That conversation at 1 p.m. in New York, 6 p.m. in London. And this is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're watching the jobs report, but also you're looking at Archegos and the fact that a lot of Wall Street banks were summoned by regulators.
Well, those are two big stories right now. On the jobs report, the optimism over what we will see Friday, starting with ADP tomorrow, and then into the claims on Thursday, and then the American jobs report on Friday. It's real simple, Francine. It folds into markets which are really correlated in shaping up. Let's go to the chart right now. This is a chart that hasn't happened yet. If this breaks through to a new higher, less negative yield, it's a big deal. That's the real yield, the 10-year real yield, and is buttressed right up against recent highs coming off the mat of a number of months ago. You see it with new highs, Francine, in the 10-year. You see it with a stronger dollar.
Yeah, Tom, I know you're a little bit of an expert on this, haven't seen it in the past, but the speed at which Archegos actually, ran into trouble and banks liquidate their positions. What are regulators doing now, or what could they do next to get up front?
That's a really important question. We don't have the time here to begin to address it, but it's real simple. The regulators always act after the fact, and it gets amended and lessened and softened along the way. The MUFG headline this morning is sobering. A bank removed from this at Francine now has a $300 million markdown.
Yeah. Tom, thank you so much. Tom Keene there, co-anchor of Bloomberg Surveillance with some great charts. Looking forward to that a little bit later. Now, let's look at what else we're watching. Kaylee?
Francine, I'm watching the virus trajectory here in the U.S. because you had the CDC head, Rochelle Walensky, warning of impending doom with the 7-day average of COVID-19 cases up 10% from the prior week. But at the same time, you have President Biden saying 90% of adults will be eligible to get the shot by April 19th. So it's progress. The question is, can we vaccinate fast enough to avoid a fourth wave and not go down the same path as Europe, Matt?
Well, I'll just jump in here and say I'm watching Germany. A 10% jump, it would be a dream come true here. We're looking at rates that have doubled over the past month. You can see from this chart that Germany's outbreak is resurgent. We're back up to 138 cases per 100,000, and we were looking at just 60-some back in February. So I'm watching to see if Germany finds some kind of plan to fight this.
I'm looking at Suez, and that is just a very simple. The traffic actually disappeared in 2.5 days, but then you'll have, of course, the legacy of what happened and some of these complex trading routes that we've been talking about nonstop because of the evergreen. Coming up next, they talk about yields, they talk about markets.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
This is an unwind of a levered position. I think in this sort of an environment, it is tempting to kind of transform it into a catastrophic financial market-wide situation.
I think we're about 4 to 6 weeks away from just this economy just completely reopening and taking off.
We have to be conscious of the fact that the vaccine alone and the COVID story alone does not tell the whole story.
This is going to build to a lot of momentum as this year goes on. So I think the environment is going to heat up a lot.
The hardest thing about monetary policy is sometimes doing nothing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
We have seen this movie before. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene, I'm Jonathan Farrow, back together with the wonderful Lisa Abramowitz. Equity futures unchanged on the S&P 500, negative on the NASDAQ. And Tom, that's the movie we've seen before. NASDAQ lower, yields higher on a 10-year, 176.
And coming back in the last 20 minutes, the markets to me are really one of the major stories today, John. This is a different Tuesday morning. The correlations are there as we drive towards the Biden speech, and particularly as we drive towards the jobs report. And then there's a continuing unraveling of the greatest margin call since time began. John, I'll mince words. I'm waiting for James Gorman and Morgan Stanley to tell me what the House of Morgan Stanley wrought.
Yeah, and I think Robin Wigglesworth of the Financial Times in the last 24 hours, asking the right question. Would it lead to broader reduction of leverage at prime brokerages? Yeah. What was on offer for some of those clients? That's the question we need to ask through the next several hours.
All sorts of great journalism in the last number of days. I thought Wigglesworth was great, short, abrupt, John, about what's going to happen this time. How can we have LTCM of 1998? How can we have the Irish bank blow up of 2008 and have it happen again? How do we get it so the prime brokers are all on the same page? Because they don't have the transparency.
Lisa, what a day to take off.
Well, I couldn't help myself. You know, you guys clearly had fun with it, with beards and ties that have managed to come back. I will say, there is also a question. You say that yields are rising. It raises a real issue for people who perhaps have added leverage to their portfolios with this idea that the Fed would always have their back. Here's this push-pull. Will the Fed have their back if you start to see more of these leveraged trades unwind as people start to normalize? This, to me, is one of the big conundrums as we see 10-year yields reach the highest levels since January.
Well, that's what's amazing about this, Lisa, and Tom, weigh in. This has happened in a pretty normal market environment. Last week, there wasn't a big event. There was no big event. There was abundant liquidity. We're still in a bull market. Markets have been surging high towards record highs. Can you imagine what's out there if you do start to get a little bit more stress in the system? What would be revealed then?
Well, the thing to me is the resiliency of the market, John. We heard from every single conversation yesterday as this was unfolding. And frankly, John, on my sabbatical, I think you heard it on Friday, is the idea of the discreteness of this bank blow up in a market. And John, I know we're going to run through the data check 42 times this morning because it is correlated. John, I would go to the real yield, what I just showed, surveillance early edition. The idea of even the real yield is about ready to break out to a lesser negative statistic.
Let's turn to the nominal yield right now. This is what the market looks like this Tuesday morning. Good morning to you all. On the S&P 500, futures are slightly positive on the S&P, negative on the NASDAQ. We'll talk more about that later. In the bond market, there's the move. Yields are higher by 5 basis points on 10s to 176.35. Your high, your intraday high, takes out the high of 2 Thursdays ago. Your high is 177.42. And in the FX market, euro dollar 117.40. We bleed lower again for the single currency, Lisa. We're down there about 0.2%. again.
Yeah, dollar strength really taking off and building after already a couple of months of the greenback, definitely weighing dominant over markets. A key question right now for the Federal Reserve is how worried are they about financial stability? And today we may get some sense of that. We've got Randy Quarles, who's Fed Vice Chair of Supervision, speaking at 9 a.m. at a financial stability particular focused speech. The question that I have is the Fed worried about the normalization of rates leading to some sort of washout of leverage that we know is building? If you take a look at metrics, leverage among hedge funds is near the highest levels on record still, even after some risk has been taken off the table. Then at 10 a.m., this is the other story, the optimism building in markets. We're going to be getting consumer confidence data. We're expecting a third straight month of increase. People out there able to get their jabs, able to get vaccinated, able to live their lives. It builds confidence, and maybe Joe Biden will add to that tomorrow at that speech in Pittsburgh. And then at 2:30 p.m., more Fed speak. We're going to be hearing from New York Fed's John Williams speaking at a panel for AARP and the New York Fed. Really, though, he is the key person to talk about market functioning. How orderly has this unwind been? People say this is not necessarily contagious, very much contained, but perhaps he has a sense of how much leverage is picking up, how much there is this buildup of derivatives that are beyond the sight of regulators. And John, to me, increasingly, and we're hearing this from Washington, that is the focus.
I think, Lisa, this is where it gets a little bit more complicated at the New York Fed, and not to go into too much detail, but Tom, this is the seat that's meant to be able to talk about markets, but the individual filling that seat is a man who could tell you a lot about inflation and the labor market, but maybe not as much about markets.
Yeah, I'm going to keep it discreet, John. I'm going to say the monetary authorities and Ethan Harris to join us from Bank of America with that large payroll number on later. To me, John, you're right. It's very, very discreet. It's not 1998. There isn't going to be a dramatic meeting down at the Fed where everybody except Bear Stearns decides what to do. This is separate and discreet, but we're learning more on a Tuesday morning out of the MUFG news. It broke an hour ago.
Another bank in the mix. And when they refer to a U.S. client, Tom, I think we're all reading between the lines. We know who that U.S. client is this morning.
Yeah, well, I think we know who the U.S. client is. And again, you know, Max Abelson's interview with Julian Robertson, coming to the rescue of Tiger Asian and all that. What I would suggest is it's still unfolding, less in the markets and more in the shock of how did this happen, as you allude to Robin's great essay.
Let's bring in Russ Kostrick now, BlackRock Global Allocation Fund Portfolio Manager. Russ, let's ask that question that's being asked in the FT here at Bloomberg and elsewhere as well. Do you think the events of the last week could lead to broader deleveraging of the hedge fund community?
I think you are going to see some people rethink their positioning. But look, I think there are a couple things going on here apart from the question of leverage and derivatives. The first is, we've known for many years that liquidity can be a challenge. A lot of that discussion was focused on the credit markets, and obviously it extends to equity markets as well. But the second part of this is really, you alluded to the calm on the surface, and I think that's true. What hasn't been remarked about as much is how much positions below the surface are being whipsawed. These daily rotations where you see sectors and styles moving 2-3 standard deviations in a day because investors flip back and forth between reopening trades and stay-at-home trades, that is also causing a lot of pain if you're on the wrong side of those moves.
Russ, how do you synthesize a boom economy into global allocation, and for that matter, just trying to get to next Monday? How do you synthesize it? And I'm going to take Hotsius over at Goldman Sachs, going out to a stunning 10% plus statistic for Q2 growth. You and I have never seen this. Rosenberg out of Carnegie Mellon, all the years he studied at Tepper, guess what? He's never seen this. How do you frame your work in a boom milieu?
Look, I think this is exactly the right question, probably the most important, because as you've said, very few living investors have ever seen this. To me, it means a couple things. One, you were alluding to before the break, which is that rates are going to continue to normalize. It doesn't mean that they melt up forever, but it is very hard, and I think, Tom, you nailed this before, to reconcile negative 60 bip real 10-year yield in an economy that may grow 7, 8, 9, 10% in the back half of the year. One of those two things is wrong. We think rates continue to normalize. The other is a lot of investors were used to thinking only in terms of beta. What's your market exposure? I think if you're going to have an economy that's growing that fast, you also have to think in terms of your cyclical exposure. There are going to be parts of this economy, companies that they're going to see demand they've not seen in decades. Can you lever those themes? Can you take advantage of that very fundamental change in your portfolio? Those are two of the things we're focusing on. Our duration is the lowest it's been in years, and we're looking for ways to add cyclical exposure back into the portfolio.
I know you're speaking metaphorically, Russ, but you said, how can we lever those cyclical themes in order to add exposure in your portfolio? There are people, however, who are taking this quite literally, as we have learned, and they are leveraging up some of their positions. Yes, rates are normalizing, but there is a belief, and the Fed is adding to this, that they are sitting on the front end. As we do see some push toward normalization, are there more accidents waiting to happen, like what we just saw?
I think whenever you see an abrupt move, there are always going to be blowups. There are going to be people that are overextended. You know, you've had a very strong bull market. There's going to be concentration. The thing that I would watch is actually the rapidity of the move. You know, we know this. We've seen that stocks and rates can move up together. Matter of fact, if you look at equities, equity multiples, and real rates, they tend to move up together for the obvious reason that as the economy gets better and companies gain operating leverage, earnings go up. What can trip up the market is the rapidity and, more specifically, the spike in bond market volatility. If you look at what's been happening the last 3 or 4 months, bond volatility has been increasingly moving with stock volatility. That's where I think the danger is. If we get these days, these weeks, where yields back up this quickly, that unnerves investors, and that's when you tend to see some of these blowups.
Russ, before we let you run, I caught up with Rick Reeder yesterday, just briefly, and he did not sound as bullish as he has done over the last several months. He was talking about a big cash allocation, waiting for some volatility through the summer. You are all on the same page over at BlackRock with that view.
Well, I hope so. Rick and I work together. We co-manage the fund. Absolutely. We have been bringing our
Russ. You buried the lead for the last 5 minutes. That's why I brought it up delicately. You sounded like a different man to Rick. Walk me through it, Russ.
We've been doing exactly what's been described, which is, look, the fundamentals are strong with the cyclical recovery. Stocks are likely to end the year higher, but we are looking at a choppier market. So what have we done? We've done a couple of things. We have trimmed our equity exposure, and we have brought the duration way, way down, as I spoke about a moment ago. Instead, rather than looking at bonds for that hedge in your portfolio, as Rick described, we've been building up cash, having that dry powder. There will be opportunities to reinvest.
Not trying to cause trouble, Russ. You know that. Just trying to tease out what's actually going on. Russ Kostrick there, BlackRock Global Allocation Fund Portfolio Manager. Tom, the end there, that's important. The team at BlackRock have pared things back. They've built up a cash position. They're looking for some volatility through the summer.
Yeah, their vector is towards a triple leveraged all cash fund, except you can't do that. Look, these guys have to be in the market, John, and at the margin, they're changing what they're doing. I don't have any belief on where the market's going. I'm just looking at the Bloomberg, and it's correlated and screams economic boom.
I'm looking at the Bloomberg this morning too. Yields are higher by 5-6 basis points on a 10-year to 176. Your equity market, the S&P 500, firmer by almost 0.1%, and the NASDAQ mildly lower. Coming up in the next hour, Greg Peters, PGIM Fixed Income Head of Multi-Sector and Strategy. From New York City this morning, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Ships are on the move again in the Suez Canal. An almost week-long effort to dislodge a giant container ship stuck in the canal finally succeeded. Authorities expect operations to return to normal within days. Hundreds of ships were forced to wait in line. The Biden administration is sounding sharply divergent notes on the coronavirus pandemic. President Biden celebrated a ramp-up in vaccinations. He said 90% of U.S. adults will be eligible to get a shot by April 19th. Meanwhile, the head of the CDC pleaded with Americans to wear masks, and she warned of, quote, impending doom as cases and deaths start to rise again. Drivers won't be asked to pay for President Biden's $3 trillion infrastructure plan. Transportation Secretary Pete Buttigieg ruled out plans to increase the federal gas tax or charge drivers a fee based on miles driven. The problem is that the federal fund that pays for roadways and transit system is funded by the gas tax, and it currently runs at a deficit. Shares of the Chinese parent of TikTok are trading at a valuation of more than $250 billion in the secondary market. Bloomberg has learned that ByteDance's value has surged in recent weeks. Investors have gained confidence in the business, and ByteDance's founder has weighed options for an IPO. And food delivery startup Deliveroo is likely to price shares in its IPO at the bottom of the marketed range. Reluctant investors and nervous markets have been weighing in on London's biggest listing this year. The sale would still raise $2.1 billion. Trading in Deliveroo shares is set to begin tomorrow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Certainly in the U.S., with the financial system here, whether it's the large banks or others, I think they're extremely well capitalized right now. Have a lot bigger cushion against events like this. but it does reinforce there's risk out there. You've got to know the firms you're dealing with. You have to understand the leverage that they're utilizing to do their business strategy.
It always feels good when you're not part of the mess. That was Keith Banks, the Bank of America Vice Chairman from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Bravitz back in the building. Tom Keene, equity markets unchanged. Your bond market yields higher, up 6 basis points to 176.
Yeah, John, let's go real quick here. First of all, on Keith Banks, he's the guy that made U.S. Trust. I mean, a great executive there running that shop. And this is the rationalization, John, of the rest of us versus the manipulations of prime brokerage. And they're, I'm going to go again, John, to where they're very discreet. What's not discreet is a correlated market. Even BitDog is up here. Bitcoin 51,000 to 58 on the edge of 60,000 right now. It's got a lift this morning, John.
It does. A rally there too, and it's rallied all through the year. And the big call from Troy Gayeski last week, Tom, that you missed was that in his portfolio, Bitcoin is now 13% of the portfolio. 13, and no intention right now to rebalance. He's just letting that one rally and letting it fill out the mix.
I wore a beard yesterday, and for the last week, because of Gayeski, I thought Gayeski looked great in the beard.
That's why you did it.
He was at MIT, he had a beard.
Who told you to shave?
Fancy chemical engineering. Okay, let's do this. Let's go over the government. Let's Segui here right now, folks. And what we're going to do is we got to keep our eye on Washington. Jack Fitzpatrick joins us with Bloomberg government. Now, Jack, on infrastructure, can you do this with 51 votes?
Yes, at least parts of it. They're going to break this big economic development bill into, it looks like, 2 parts. One, infrastructure, and then they get to the healthcare and childcare stuff they want to do a little more broadly. You can do a lot of spending through the reconciliation process that lets you do something partisan in the Senate. It doesn't look like you can do the specific earmarks they want to do. So if they have to break it up further, or if they just have to call it a loss and get Republican votes, that's a possibility. But there are definitely portions of this that they could do in a partisan way.
Jack, I don't know if you're aware of this, but the beard is gone and the tie is on for John Farrow and myself this morning. And, I got an email from Al from New Jersey yesterday that said I'm going to be doing a construction flag letting traffic through if I keep the beard on. Do we have the employees to do our infrastructure in a boom economy?
It looks like, in Washington, at least, the expectation is that we do. This isn't quite the, public works approach